All right, and we should be streaming now onto YouTube as well. So just as a reminder for everyone, if you don't want to, if you don't have access to a microphone, but there is a chat feature on YouTube, so we can see you on there. For all 7 of you here right now, but hopefully everybody will remember that one. But yes, anyway, so. Oh man, what a week. So kind of interesting price action just sort of across the board. Everything there just doesn't seem to be a safe harbor anywhere in the market. I mean, Cameco's got a little bit of strength. It's fighting. It doesn't wanna sell. So it's one of the few things it seems to just being very plucky and resilient as we've come to expect, really, um, from the Saskatoon uranium empire. But other than that, I mean, yeah, it's a bit of a little disappointing kind of I would say some retracement, if that's the right word. Everything just seems to be the last week across the sector in North America, we've seen about a 7% pullback. So that's pretty much, I mean, you're looking at probably wiping out half of whatever it was that the gains from. I wonder if I could set that up in Koyfin, where I can actually set up a price from a date. And that would be really interesting. Let me see if I can do that. But at any rate, yeah, I mean, I think just, sheesh. There just isn't a day where you just don't know what the market is going to do. It's really hard to predict. I mean, it's like if you're holding, you feel like you're holding, but for me, it's really hard to buy. I think, unless anything, if I'm buying anything, it's definitely not full positions in anything, for me. So I don't know, Iron Wing, um, Alex, Austin, come on up, please.
Yeah, there's been a few that I'm kind of curious about. I might buy like a half position. Some of them are just really low priced, like Fission 3.0. I've been thinking about that, or Forum, one of those. I mean, they just took a big old hit, Forum, and they just have never recovered. So I mean, it's one of those. They got a lot of projects or projects, as Canadians would call it, and I don't know, just that's one that kind of excites me. I've had it in the past, so that's what I'm kind of thinking. Maybe a half position coming up soon.
Yeah, I mean, I'm really interested in 92E. I want to know now that they're actually, drilling something that I find somewhat interesting, and that's the Tower tenement. I don't know if they're going to find anything there, but it's within the basin, proper. So, I don't know what the drilling there has been in the past. Whether it's just been, it's so close to. I mean, again, you do sort of realize, like, finding these uranium deposits. I think they're smaller than they look like, than they appear on the map, and it is sort of like finding a needle in a haystack in a lot of ways. So we'll see what happens there. Um, but yeah, it's just been very much, definitely, you know, I think it's been pretty. I've been using Koyfin a bit more, and that's allowed me to see, I think, a bit of a wider picture on the price action in terms of, it was really interesting when I moved things into sort of several different lists, things I would consider to be investment grade, things I would consider to be the watch list items, and then actually I called them scams. I'm not going to tell you what's on the scams list because I'm not gonna make anybody happy with that. But don't worry. Any favorites that I've been known for getting crap for in the past is not on that list. So that just let people know that.
I haven't been on there in a while. Is that on proven reserves or not?
I haven't put the Koyfin list on proven reserves yet. The proven reserves,
So what is poison? What
Koifin is another just another one of those information aggregation sites. It's kind of like TradingView. They focus on the fundamentals than more than say a TradingView, which would be maybe more technicals focused. So there's a lot of information here that you can find for like financial analysis. You can just see it goes a bit more in depth on like cash flows and other sort of fundamental metrics. I'm checking it out. I'm not married to it just yet, but it has been kind of cool so far. So
So all uranium shares would be overvalued there. Cash flows and uranium shares, they go well together, Chappy.
I know. Tell me about it. Jeez.
But I agree. 92E, I've got my eyes on, and also T92, the one that Pat's in. Just waiting for this drop. Like I know that it could. A lot of these uranium shares have reached their resistance
Holy
levels.
Damn.
What's
You
up?
have to be kidding me. Oh my god. I missed the Silex low on the day so far by 1 penny. I put my order in for 311 and it dropped to 312. And now it's doing the Silex thing where it's going back up. We'll see if it comes back down, but like oh my god, I can't believe it. Damn it.
So that's a big drop today, 6%. It's dropped open
Well,
up.
so far.
So
So
3 1.
far.
Yeah. So we'll see. But yeah, I think you're right. 92E is looking really tasty. But again, I'm just waiting for this drop. I'm not going to put anything into the market unless I get a good 20-25% drop. If not, just wait and sit and see what happens. But T92 looks interesting as well. I just don't know when they'll have drill results because it sounds like they're just setting up. So it could be, if you want to get into on that, a good 6-month hold at least, I would say. Because again, drilling when it comes to winter in the basin, I don't know. I reckon it would be harder. But some companies seem to be able to do it. So we'll see with that one too.
Yeah, I mean they usually don't do drilling in like the heart of the winter. It seems like, or they have to wait till everything's like really good and frozen. Maybe like in January and February is when they start drilling. That's when you usually hear what would be a winter program, and then summer programs usually start sometime around June-ish. I think just depends.
Yeah, I think there's only a few windows of opportunity where it's good to drill. But yeah, so we may be waiting a little while on that one. But I recommend everyone to watch the Crux Investor interview with John Borshoff. It's a good near hour-long interview. It's really worth it. Makes some really interesting observations. So firstly, just it seems like he's ragging on EMEA, just talking about these companies with 20, 30 projects. Good luck getting any of them up off the ground, which I sort of agree with. Like UEC, we've got projects fucking everywhere. That's nice, but how are you going to get any of those off the ground? And economical is another thing. So yeah, a really good interview. I recommend everyone to have a watch.
It's so interesting that Chalmers seems to have that same from Energy Fuels. He has that same perspective of just constantly ragging on, like you get him talking, and he won't really name anybody by name, or he won't call anybody out like by the company name, but he will tell you that all of these people are not going to be producers, and I mean, does that change? I mean, that sort of, it doesn't necessarily change my investment thesis on like, okay, you got to go into DPL and got to go into Energy Fuels. I will say that look, Energy Fuels is on the watch list. So, and mostly they're on a watch list. People have heard me say this before. I'll say it again. I'm waiting on that information on their rare earths project. Sorry, yeah, and to see whether that kind of revenue could potentially support their stock price. I've been thinking about making NXC my next sort of whipping boy, but I was sort of told to maybe not do that. um, Or I don't know. I should just wait till see
You
how
got enough
things
enemies
go.
already. You got enough enemies
Oh, I
already.
know. Well, see, the thing is, like, when I say like, hey, I'm gonna go after NXC, it's like I'm on the shareholder side there. Who I'm attacking there is really, or who I'm not really saying attacking, but who I am challenging there is the management policies of NXC, which is what shareholders should be doing. Because anybody who's a shareholder in NXC should be, frankly, I think, rather disappointed in their performance. I mean, in all of my investment grade projects or investment grade items. I mean, NXC is one of probably the worst performers over the last. Probably it's the worst performer over the last year, over the last 3 months, over the last month, and it's hasn't quite sold down the most, but it's pretty close. So I mean that it's a really, for what it is, it's an underperforming stock for the most preeminent deposit in the Athabasca Basin. I mean that's disappointing, and I think that is a consequence of management's actions there, and I think shareholders should call that out. So
Well, that's the thing, though. There's all that news came out that how much they're paying themselves. What was it, 23 or 28 million? I assume a lot of that would be options within the company. I doubt they. I haven't looked into NextGen's financials, but
Yeah, I'm pretty sure it was.
yeah, well, but still, like that is pretty disgusting. When you're, years away from even
completely
development.
completely undeserved without any major milestones, in my opinion. I mean, maybe you do that after the feed study comes out and you've properly managed that. That kind of compensation should frankly be a reward, not going along to get along kind of compensation, for particularly for an asset that's just not in production and has no near-term timeline to production. I mean, this is ridiculous, frankly.
But
Um,
it would have been shareholder voted those remuneration packages at some stage as the AGMs, I assume. So
well,
you
I
sort
mean,
of have to blame the shareholders for
yeah, I
allowing
know.
that to be voted
Exactly.
through.
And it is a part of it is to point out to shareholders, like, look, you're losing some serious value here. Now, there could be some people that are like, there are shareholders, and they don't care because it keeps the price low, and maybe they're accumulating. That's fine. I can understand that. I completely understand that. But at the same time, you know, that only works to a point, because particularly when you're now going into the stage where they're going to have to start raising some serious money here, and the only way to raise serious money while avoiding dilution is an increase in the share price. I mean, if NextGen was $8 right now instead of $4, then you have to sell half as many shares to raise the same amount of money. That is huge. I mean, you can't really underestimate just how impactful that is on dilution values. So,
Yeah, Chapman, a question for you. How much, if any, do you associate that same maybe fear of dilution or really expensive debt factor? Do you see the difference between the producers like Glow and Cameco and just the rest of the sector? That seems to be the one thing that's really jumping out to me. There's a massive divergence. This is something I think has been talked about in these spaces probably every other time. It seems to be happening right now. Like, how do you feel about that? Is that what's going on, or is it something else why they're outperforming?
well, I mean, I am not totally sure. I mean, it's hard to, it's usually never one thing. But I mean, I will say that Global is significantly outperforming NXE over the last year. The price change for for Global is up 17%. NXE is down to 11% right now. That's the 1 year price change. In the last 3 months, Global is up 37%. NXE is up 13%. I mean, Global is up in the past 1 month 25%. NXE is up 12%. I mean, it's significantly different. And I think a lot of that does come down to the fact that Global has, I think they do have, front and center, that they are not in the business of diluting shareholders. So I think that is a part of it. Beyond that, I can't say for certain. I mean, I think that's the best answer I have there. Is that I think it definitely doesn't help. So, but yeah, we've got Eric up on the dais. What's up, sir?
Hi, I missed you guys. So I'm very encouraged by seeing the smallness of this group this go around. This is what I would call one of these contrarian signals, where we would see some of these uranium groups push a couple hundred. When you've seen 16 or 17, only the strong survive. So if we get any kind of break in the market, I think we get a nice pivot up. But if you talk about outperformance, I'm really looking at a potential with Encore listing on NASDAQ this week. I took a look at the comp, which is UEC. Now, albeit UEC has some more pounds on the ground than Encore does, I just looked at it from a mechanical perspective of UEC's shareholder base. And what I found was there's 68 ETFs that own UEC and about 34 mutual funds. And if you look at the composition of it, like some of them, like IWM and some others, they're not playing in the Canadian space. And so, I looked at Encore's major shareholders, from Power One, Hooray. I think Hooray is 15%. Red Cloud said that Sprott Asset Management's got 13% position. Power One was probably about 10% pre-Azarga merger. And you have a few other players in there, like URA and URNM and some of the other of the like. But I could see, UEC's institutional holdings about 40%, and most of them are just automatic ETFs. Some of these ESG funds and stuff like that have just bought the stock. So it looks like, from a mechanical perspective, Encore listing on NASDAQ might have some good mojo going forward.
Yeah, I mean, I'm looking at Encore, because I know the TSX version of that stock. There's two ETFs that hold it. I'm looking, well, this is based off Koifin right now. So, but yeah, let's see here. What's Cameco look like? Yeah, there's like 62 ETFs that hold CCJGs. Wow, that's a big difference.
Yeah, but what you're going to see is a lot of these uranium stocks are in the 60s in the ETFs. And if we see, it's not just Encore, it's any stock that's going to make the jump into this realm. You should see, I wouldn't say an equal amount, but in the range or somewhere close to that of these guys just blindly buying.
Yeah, I mean, I'm looking at you'd see like Energy Fuels. There's 33 ETFs that hold Energy Fuels, UUU. So yeah, I think definitely not having an OTC listing.
Is UEC the biggest or one of the most held? Also, I'm curious about that one.
I'm not certain.
Well, I don't know if it's the biggest. If you, again, looking at a comp basis of Encore versus UEC, UEC's got 4x the market cap Encore has. But when you look at it from a fund shareholding, I mean, there's some in there like IWM and let me go through. I've got some notes somewhere. Give me a second.
I think it's like
while you guys are looking that up,
22%.
I just have to mention that I took kind of the back roads to drive back, and I passed by the Luce Libre house. So it's a house that has Luce Libre on Wednesday nights. Real deal. So I am definitely in South Texas.
Okay, so State Street Global Advisor is XME. Look at XME's position in UEC. It's like 30 million shares out of 334 million, I think. That's just one ETF. And then I wasn't even counting the positions that BlackRock and Vanguard have in UEC. You also have some other players in there called Alps Advisor, Geo Capital, and Dryhouse Capital. So, there's probably 27% of UEC's total outstanding shares are owned by these large ETF
I think
players.
it's 22.32% in US ETFs is what is owned by is has ownership in UEC. So
Yeah,
whereas
well, look at that Hong Kong ETF, Hooray, HIRAE. They've got already, according, this is a Red Cloud report they put out, a 15% ownership in Encore. 15%. And then if you look at what they're in UEC and some of these other guys, I've never even heard of this fund before, but they're based out of Hong Kong. But, I think we're going to start to see more and more of these uranium companies uplist. This is just a mechanical thing. You see these guys where they're at and where they could be going, just based on fund flows.
well, yeah, and you look at
And
this, like Global Atomic only has four. There's only four ETFs that hold Global Atomic, so that's a huge difference between, say, a Global and even like an NXE that you do have. Well, I mean, you've got 10 ETFs that hold NXE, but yeah, I mean, I think that's that's probably a good bet. I don't know. You might roll. That's a good observation. I might roll some shares into Encore just see what happens.
yeah, and the other thing is the timing of this. If they pull this off with this week or early next week, this is right before most mutual funds and hedge funds close their year-end books at September 30th. So some people might be doing some window dressing right in advance of that time, and then you've got a new calendar year where funds will be looking at how they position come 10/1.
Man, that's. I mean, I think for Global, I'm really surprised that they haven't done the uplisting yet. I mean, maybe because they're not big enough. I don't know.
Well, I think it's a good strategy to start looking at when these guys do it, and just roll one into the other, knowing the ETF exposure into each of these, energy fuels, UEC, Next Gen, Cameco. It should add juice to anybody, and especially the newer ones because they don't have as big of a market cap.
Okay. Oh, good. I can add a column in Koifin. Fantastic. Um, Wait, no. Oh, come on. That was just the holdings. That's just okay. This tells me the number of holdings in the ETF. I need to know who actually holds them. Oh, sheesh. Okay, we're gonna figure this out. Um, sheesh.
So Chapman, if you're looking at that, I got a question for Eric. So a lot of times markets kind of sell off for certain sectors towards the end of the year. So with tax loss harvesting, do you feel that that could happen with uranium, or just most of the blood's already been let out that's going to be let out?
Hey, who knows? I'm not going to sit there and claim to know, right? But I mean, a lot of people have taken losses already in fear and gone cash and sidelines. Uh, I think there's a certain percentage that gets washed out or has already been washed out. Will there be sellers? Yes. But it just depends on the individual stocks coming in November. I'm saying if you're underwater by, let's say, November 1st, then I think you're going to have more tax loss selling.
And I don't know. I think there's a distinct possibility of that happening. I mean, the the. I mean, I was looking at it in terms of just performance for, and everything isn't. It's not. We've had, you've had a kind of a comeback here, but the time to get in was about 3 months ago. But I mean, some of those, you can't really keep up with this. Some of these price changes here. When you look at, I guess the overall, you just take URNM. You're down 6% in a week, but you're up 12% in a month, or up 14% in 1 month. But at the same time, I mean, it's not huge. There are other sectors. I mean, I was looking at this and I was like, oh boy, like would I have been better off just putting my money in Tesla? I mean, of all things, you know. Um, so yeah, there is some testing here of patience and will, I guess. I mean, once you're in, of course, but at the same time, it's like, oh sheesh. So I think what this list in Koyfin, or this sort of these things where I'm separating them out by what I consider to be investment grade watch lists and then scams, you do start to see a little bit of a divergence in that, particularly on particularly in the ASX, where you can find that your paladins, your boss, your Silex, those are doing quite a bit better than, say, over time they've been doing quite a bit better than everything else really. But yeah, it all kind of depends, I think. So
Chapman, NASDAQ.com's got some pretty good, what do you call it, listings of the ETF and mutual fund exposure for each stock. It's easy to find, and a lot of them are current. They're saying June 30th, 2022.
so far there's a bit of a sell-off today on the ASX, so I don't know what to think about that. It's not super deep red, but it seems like there's more volume than there was yesterday. I don't know.
Well, when we're talking about tax loss selling, I think if you're worried about that, I think usually it's the second or third week of December is when you can pull the trigger and buy, because people are always worried like people are going to wait till the very last second to sell. And it's usually the lows are like December 12th, 13th, 14th, or 15th. So, when a good time to pop or a low risk entry is usually around that time, I think, for stocks that are losers.
I'll just get some clarity on that. In Australia, our tax years to 30th of June and then resets on 1st of July. So our tax loss season's mid-year, so which may affect the ASX differently than the US.
Why do they do that?
It's just our financial year. It's from 1st of July.
Winter. Yeah. I mean, winter's usually seen as the end of the year. So,
So that's why when it comes to like mid-year next year, you may see, tax loss selling in Australia. But yeah, it's hard to say how many American investors are in the ASX, but, it's majority Australians. So you won't see that sort of effect on the ASX come December.
So Iron Wayne, what do you think about UEC just like buying all these things? They're just kind of becoming collectors, or they're just, because I mean that's what his other company is, Gold Mining. It's just like a bunch of like gold mines. Buy this one, buy this one, buy this one.
I can say with a high level of confidence what Amir's game is. He wants to sell out to Chevron or ExxonMobil or ConocoPhillips.
ding, 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 ding.
But that's the thing, whether that interest actually flows through to uranium, you know what I mean? It's a big bet. And, buying these projects and just, adding pounds, in the ground to your company is one thing. And, that's just some people's way of expanding, shareholder value. But I disagree with it. It sounds great. I heard Amir talk 2 years ago and talk about all these different, plans here and there where the only, he was talking about the mill and shit. Anyway, but I remember hearing a lot about all these different projects. It deterred me, to be honest, as an investor. If you want that sort of exposure and you want, just added pounds to the ground, yeah, it may do well. Don't get me wrong. It is a different style of what some other uranium mining companies are doing. And it may add value. But to be honest, when I see Derek pumping any stock, I tend to really stay away from it.
So I have a question. I heard about this and I was actually kind of surprised. Like, how feasible is this big oil like going in and buying these uranium companies out? Like, And if they did it, like, do they think that this would be a meaningful impact on their revenue? Because everything you could even optimistically project from Cameco candidly seems trivial to somebody like Exxon or Chevron. Would this be like a PR
So,
stunt, or why would they do it?
no, Austin, it's not a PR stunt at all. It's the same reason BP pimps solar and wind all the time, right? How big is British Petroleum? And then, well, we're into clean energy, green energy. This is their way of greenwashing what they do and being able to put a good face out there. So it's a PR piece for one, but two, you might get carbon credits or whatever, the global structure is for this kind of thing. So I think uranium, to Amir's point, and I thought this long before even Amir came out with it. And the big boys were all in uranium in the 1970s. Mobil, Kerr-McGee, Union Carbide, Conoco, Phillips Corporation, Exxon, they were all doing it. Texaco. So I just think those companies at the end of the day are energy companies. And it's whatever is working at the time where they could get profit or be able to operate with less hassle, they'll do so. And I think there's the potential to greenwash uranium and bring it on board with these corporations. They're throwing off so much money. Just see how they deal with, let's say, windfall taxes, and maybe you can get around with some of that stuff if you buy ESG compliant companies and energy, whatever it is we're making.
Well, you've got to make, uranium ESG though. And that's sort of the gamble here, is that, you don't get the kind of credits that you do with wind and solar that you would with uranium. I mean,
hey, the two biggest cheerleaders at ESG are BlackRock and Vanguard, and you can see where they put their money in Energy Fuels and UEC and the others. They have big stakes in every single one of them.
well, I mean, they have big stakes in everything. I mean, what are they not in, really?
Oil.
I mean, well, yeah, I suppose. I mean, I suppose that is fair. That's a fair assessment. But at the same time, what I'm talking about is like, you really have to get like government support for that in a bigger way, and rather than just, I don't know. I mean, that's a big investment in, like, buying UEC would be like, I mean, that's a market cap at this point, like something ridiculous. So it's that would be a hard sell, I think. 1.25 billion, sorry. With some whatever premium that you might get there, and I mean, and that's with the stock beaten down. I mean, that's a lot of spending.
So rounding there at Exxon.
Yeah, look at the free cash flow.
Yeah. $1 billion free cash flow last quarter.
Yeah, and look at Exxon on a quarterly basis.
But that's material, though. I mean, that's what I'm saying, is that you'd have to get shareholders to approve that, I think. That's well, or it's so big that shareholders could take notice of it, and that would be a conversation. I think that, I don't know. I think maybe I think he talks about selling to oil companies, but I think he does want to sell. He wants to repeat Uranium 1. And, whoever he can get to buy it. But I think that is the plan. So, I would agree.
Well, but these companies, as you say, 1.2 billion, then you've got a premium on top of that. Then, okay, that's nice. How do they claim these carbon credits per se, saying that we're producing green energy? They're still going to spend hundreds of millions to set up these mines. There's no mine that they can instantly claim from buying up UEC. So would it be smarter for, I don't know, go buy Paladin, start claiming those carbon credits straight away,
or buy
whatever
yeah, or whatever latest, or go buy NXE if you actually want to. NXE wouldn't cost that much more.
But you got to think, and you got to remember. Sorry, Chapman.
So no, please.
These energy companies were doing exploration, were drilling holes. These were the guys who created in situ recovery. Atlantic Richfield was one of them. And I spoke with Dennis Stover before, who used to work for Atlantic Richfield with the team that created in situ. So, if they have the drilling expertise, I think in situ plays might be and easier bolt on from an operations perspective for them because they're used to drilling.
I completely agree. I mean, I'm not discounting that one there. Um, I think it's I mean, the question is that we're sort of debating here is that how much are they buying these companies? Are they buying UAC because you know they want? I think you have to have something of a promising deposit there. UEC is going to have to find something that is actually worthwhile, and then they sort of sell the rest of the company with it. With
Those
this idea.
the Wyoming assets that UEC has with Uranium One purchase is the real deal.
Maybe. I mean, let's see. What are those assets again? I'm thinking about that. Um, I know what you're talking about, and I'm trying to think of where they are. They have like one that's close to where Cameco had their operation there before they put that into care and maintenance. Um, man, I mean, in situ is the thing is with in situ is that it's harder than it comes across. It's not really like, oh yeah, we're just gonna do in situ. We're gonna have these like really low, you know, all-in sustaining all-in sustaining costs, and it's like you really have to have, I think, property that is quite amenable to it, because there's a very specific pH range from what Chalmers I talked to him about that it works, but if you have to deviate from that, it gets difficult quickly. So I don't know. I mean, the thing I found very interesting with Chalmers is that he said that he preferred hard rock mining to me, as opposed to in situ recovery. And I don't know what to make about that. Maybe that's because he could be talking his book for the company, like, because they don't have a really good in situ recovery. That makes sense, I guess. But
Well, they have some uranium assets in South Texas, just like Encore and UEC, and they have that Alta Mesa mill down there.
yeah, but that Texas asset that they have has never really produced all that much. It's not really been. I mean, in situ in Texas has never really worked in like a big way because it's so difficult to mine in Texas with in situ because you've got the groundwater problems to deal with. This is sort of.
I would say I think a big part is you don't have a lot of federal land. You got to go to people that had old Spanish land grants down here, and you might have 50, 100, 200 people that have claim on that. And you have to get signatures from everybody.
Oh, Jesus. Oh, boy. Yeah, and it's not only that, but the thing I say to people that like, oh yeah, we'll do in situ in Texas. Okay, well, do you know who you're competing with? You're competing with Boss. You're competing with Honeymoon. Sorry, no, 4 Mile in Australia, and you're competing with Kazat and Prom. And you know what those people don't have to do? Remediation. So they are immediately at a cost advantage compared to anything that you're going to do in Texas. So I'm very. That's just. It would take something true. It takes something truly special. It would take something truly special, and you can read my words there to say that there's nothing in Texas that excites me, to be honest with you, at all. So, yeah.
Look, I tend to agree with the in situ. I just focus on Peninsula. I know how much hard work they've put in over years to get their in situ recovery to where they want it to be. And then you've got increasing costs of sulfuric acid. You see the Kazakh's costs are going to start increasing soon. You've got to really get the in situ down for that deposit that you're planning to mine. Every single deposit is slightly different. So you've got to do a lot of testing to actually get it right and get it economical, to make sure you're not wasting any money on it. So it's people just go, oh yeah, fucking in situ. That's nice. Good luck getting your patterns down and the chemicals right to actually, get the grades you need out and you're not wasting anything. It's not that easy of a process. So that's why I agree with Jim Chalmers. Just the hard rock digging it up and sorting it is a little bit simpler, where you know what you're going to get. Well, in situ, there's a few different variables that can really affect your process. And as you can see, even with Penn, what's their all-in sustaining cost? Something like $39 a pound. And that's one of the cheapest producers in the West that we're going to get with in situ. So it just, I don't know. In years to come, or some of these in situ deposits, I don't think are going to be as cheap to produce as some people suspect it will be.
Yeah, I would agree. I mean, and when considering the fact that it's in situ is the most vulnerable to environmental regulation as well. I mean, you really cannot discount having government policy, bureaucrats deciding something arbitrary and just completely comes in and screws you over. Um, on a cost perspective, especially, where all of a sudden,
Well,
instead of like 10 years of remediation, you're now having to do like 20 potentially.
well,
I mean,
that's what makes Texas and Wyoming the two best states to operate in. It's just because they're agreement states. You don't have to deal
Wyoming.
with entities.
Well, Texas can still they Texas is a bit less friendly to uranium in situ than Wyoming, I would say. I would put Wyoming first. Texas, I've seen things in Texas, seen areas in Texas where it hasn't been quite as friendly. They're very friendly to oil and gas, but not so much to uranium. So, I mean, obviously, but yeah, it just there's been things where it, it's become fairly clear. Like I think Encore has actually had some lawsuits in terms of groundwater issues in Texas. So, whereas you just don't get that in Wyoming. So, because there's nobody there. I mean, everybody thinks uranium is like super dangerous and all that, and and you're mining it on your property, and somehow people think like, oh God, you're gonna get uranium in your water or something like. Okay, well the uranium's there already, so I mean, I don't know. It's a different animal.
Well, the Colorado River in Arizona, I forgot it was some ungodly amount of uranium gets in that river every year naturally. It's like somewhere in the tons number.
I mean, it does go through, basically it cuts through a fairly substantial uranium district, so it's not surprising, I guess. It would be interesting how if you could come up with a mining operation for that, but oh God, that would be such a environmental hassle and a half. God, oh, just forget it.
So, in going back to the big oil companies purchasing out uranium companies for some form of greenwashing, again, I don't think uranium's there yet. To be honest, to really say, they'll take on just as much flack for mining the uranium currently or getting into it as they would to be seen, as they're doing something good for the environment. Like you still see BHP, massive mining company mining every fucking resource in the world, yet they don't mention the uranium. They don't want anything to do with that because, again, it just brings some negative attention still at this point. We may see a change in years to come where it becomes much more green and friendly and, Greenpeace is behind it potentially. We'll see about that. That's when, I see these oil companies getting in.
Who owns Olympic Dam? Just help me remember.
BHP.
Yeah, and that's the biggest producer of uranium in Australia, right?
Yeah.
Yeah, but you can go look at their financial report and go look to see how much they produce, and good luck find it.
Yeah, they won't even mention it. So, I mean, if you look at their website, they will not mention uranium at all. It's funny. So, I don't know.
Because that's what I mean. It's still got a negative connotation to it, to the general public and to mainstream investors. It's risky and it's dirty and it's radioactive. So I've seen, big companies buy out these smaller uranium miners. I think it's years away. It's not around the corner.
So, And I think again it comes back to, look, these oil companies want to make money, I think, and the idea that they're going to buy a bunch of unproductive assets, which is UEC, basically. If we're being really honest, this is just, it's a collection of mines that are, frankly, just they're never going to go into production in any meaningful way. Not enough to even remotely justify their share price. I mean, and they don't even have a backup plan, which would be like, Energy Fuels kind of a style backup plan where they can fall back on rare earths or something like that. So it's not impressive to me at all. So.
Well, Energy Fuels had to make the transition to rare earths because there's no amount of ore in the United States that can fill up White Mesa. The Lundins used to have it under Denison, and the real anticipation was that northern Arizona strip where Energy Fuels and Encore has that big position. That could fill up the mill. There's enough uranium out there in those breccia pipes. But it's untouchable since Obama put the ban on it in 2012. Might have been earlier than that. And so the Lundin family jettisoned the White Mesa mill after that, because how profitable it can be if you can only get a few million pounds of hard rock in there.
Yeah, indeed. So let's see here. What do we think is going to happen tomorrow? I guess we'll turn our attentions to how much Jerome is going to mess with us. So what do people think?
$75 basis points and stay the course. Threaten another 75 in the next Fed meeting.
I would agree. I think that's probably in the cards. So, I mean, 100 wouldn't surprise me. I think 75 is probably a given. I think the markets have been, they I don't know if there's a potential for a relief rally or not. I think it's I don't know. I mean, you're looking at an API. Jeez, crude stocks are down. Oh boy. I mean, there's indications that the economy is slowing, but it's not. I don't know. It's hard to predict what the Fed's gonna do. I guess. I bought a little more silver today because in the previous, I would say there's a 50% chance that silver will get a brief bounce after this meeting, but then again, a lot of stuff gets a brief bounce, so who knows? And I don't know. I'm a little too scared by uranium though, so I didn't do that, or buy any more of it anyway. So, I mean, I have my view on my Silex pricing, and it's getting there slowly but surely. Cameco is just remains very stubborn. It's battled its way back up to 28.40, and so it's not in immediate like panic territory, but it's opening really low every day, and battling its way back up, and that's not super great. I mean, we've had basically like 3 trading days in a row where it's gone below 27.50 almost. Well, today it was what, 27.58, so 27.60. It's had 3 trading days in a row of having a pricing below 27.60. So it's really a sign of weakness. And then, I mean, I think even today, like, geez, the day high was all the way up to 29, and it immediately sold right back down. So that's, that's fun.
Well, I think that's right. that's right in line with uranium seasonality. If you look at that historic chart, Cameco takes a dip at the beginning of September, rises in the middle, and then takes a dip right into October, and then takes off.
I mean, maybe,
I've
I
got a
think
couple of questions for you Americans, okay? Firstly, how many more MIFED meetings are there? 2 more in the year, and then they take December, Jan off, is that right?
sounds about right. I think.
Yeah?
Yeah.
So there's potentially 275 basis points, or one, and then a 75 or a 50, I guess. So we're looking at about a 1.5% increase. But on top of that, what I don't understand about you Yanks is, look, it won't affect the consumer. If you've got a home loan, you've locked in for 30 years at 2.9%, a year ago, your expenses aren't being affected at all. Rising interest rates is just going to affect people purchasing new homes, refinancing, or companies, of course, borrowing today. That's what I don't understand, is that it's really not causing a deflationary environment if someone's repayments on their home loans aren't changing. If I'm locked in for 30 years at 2.99, then interest rates increase. What the fuck? It doesn't bother me. It doesn't affect me in the slightest. So this is where I don't see raising those interest rates going to have a massive effect on retail spending.
Well, if you are a singular home buyer, I would agree with you. But there's a lot of people out there that are 2 and 3 homeowners, and they bought them as investment properties. And then you've got the BlackRocks of the world that buy up 80,000, 100,000 homes, and some of these other guys. And now they're sitting on dead money, and they're trying to get out of it just like Zillow did not too long ago. So that's where the problem lies.
Fair, if you've got a devaluation of the property price and you've got a higher loan, but to show you what happens in Australia, most people are on variable home loans. They might have a fixed term for a year or two, maybe 3, maybe 5, maybe, very rare. Most people, I would say a good 50 to 60% of the population is on a variable rate. So we've seen our home loan repayments on, say, an average around $500,000 increase to about $600-700 a month with these recent rate increases, which is going to cause a deflationary environment. People have less money, they're paying more on their home loan. So you're actually going to see inflation get tackled a little bit better. But if you've got a 30-year, that's where I don't understand the American system. Increasing interest rates doesn't have a huge effect compared to some other countries that are more on variable rates with their home loans.
I would say oh no, I understand where you're coming from, and you make a lot of sense. But what I think you should look at America is just the amount of leverage as opposed to the interest rate. And so there's a lot of people that bet the F and farm. I mean, there was a story in Miami I read like a year ago. Some couple was doing Airbnbs, and that whole Airbnb market, I can't think of some of the other vacation rentals, VRBO. This couple in Miami bought 10 condos, just doing Airbnb. Oh shit, we're making so much money. They went out and rented 8,000 apartments. And then the market went against them. They got blown out. That's the kind of things that leverage the insanity.
Of course. But when you talk about that, that's, a very small portion of the population. You're talking 1-2% of people having, huge investment portfolios. Other than that, most people might have one, residential, and then they might have 1, 2, maybe 3 investment properties. But again, if you've got 30-year fixed terms for those investment properties, property price may come down, you charge less rent, you might be forced to sell. But still, I just don't see it being such a huge effect. Well, in Australia, 50% of the population, their mortgages have increased by, let's say, 20-30% on their repayments over the past 6 months. So we're quickly going to see inflation be tackled here.
But here's the other scenario there. There's certain markets, what I call ghetto fabulous markets in America, right? Las Vegas, Phoenix, Atlanta, Miami. These are the markets where people live for today. I'm not worrying about tomorrow. I'm in the luxury automotive segment for my personal job. And I've dealt with customers, this automotive aftermarket, and they'll have a Ferrari 488 in their. One guy was telling me, I had a 488 in here last week. The guy was putting custom rims on it, and the repo guy came in and towed the Ferrari out. These people, and there's quite a few of them. We're investing in hard assets. We have a different brain than most of these people do. They've got a good income stream, and him and their wife. And I've got a friend that does custom home remodeling in Dallas, and $1 to $4 million homes. When the big freeze hit, people had problems with their pipes. Most people in a $2 million home or $1.5 million home didn't have $10,000 to get to work on their place to do a down payment with a remodeler. That's who they are. They're like North Dallas. I got people who have a $1.5 million home, got a Range Rover in front, Porsche 911, got nothing in the bank.
Yeah. No, you're right. There are plenty of people like that.
Yeah, and I think like Iron Wing, it's a really good point, which is kind of like why I think whenever the Fed has to stop tightening, I actually don't think it's going to be anything domestic. It's going to be because the Fed broke something abroad. With like the spiking dollar, I think we're real close, right? Like just if the dollar continues on this upward trajectory, I don't think it's gonna. I don't think it can last too long because a lot of other places in the world you have two factors, right? You have interest rates going up domestically, and you also have the cost of pretty much everything increasing because of the dollar is just going nuts. So yeah, I agree that I don't think that what breaks is going to be in the United States first, but they will break something very important.
Oh, your exporters must be getting fucked at the moment. You know what I mean? They can't be competitive with a rising dollar with everything else crashing. It'll be hurting some American companies still, I'm sure.
Yeah, there's it's very strange today that we saw an increase in new home builds, and the only theory that I can come up with there is that contractors are starting to build homes now because they think the Fed is going to pivot, they're going to lower rates, and by the time that those homes are finished and ready to be sold, interest rates will be back down to a lower level. I'm not sure.
Well, potentially, from my understanding, your inventory is still very slim. There's not that many builds. And also, you've got to think about generational cohorts. Millennials are now becoming that age where they're late 20s, early 30s. And it's a large cohort. It's a large group of people that were bought at the same time who all want fucking houses right now. They're in that age where they're cashed up through COVID, etc. But they need somewhere to live. It doesn't matter what happens with interest rates; they need somewhere to live. So I think you've got those population pressures as well influencing the housing market.
On the housing builds, one other thought on that one. This is real anecdotal, right? But I've got two friends that were trying to build houses last year, but it's the cost of materials were so high they put it on pause. And I know it sounds ridiculous, but I think you actually may be having a little bit of pent up demand on people wanting to build houses. Because if you have the money, you're well off. Like I'm talking just like upper middle class to like rich people. People are making a good amount of money. There's never been a better time to build a house than right freaking now. Lumber's crashing. The cost of a lot of other materials is crashing. Building crews actually have capacity. They did a ton of hiring, right? And they were scarce. All of a sudden, you can find great builders to build your house. Like if you have the money, it's a great time to build. Like there hasn't been a better time to build in years.
I'll say this: like when it comes to permits, that's where the action's at, right? That's where you really want to look at a forward indicator. I think new home starts are a lagging indicator. A lot of these new homes, I live in Austin, Texas. Uh, you're having these huge towers going up everywhere downtown Austin. I keep joking this place is turning into Los Angeles. And if you've got a 50, 100, $200 million project, once that bank financing is in place, it's go time. It's go. There's no stopping it. So, you can consider those new homes when all those new units go up. But if you've got big projects, big multifamily, multi-use, or whatever it is, they don't stop, and they're already a couple of years in the planning stage before they even break ground. So that to me is more of a lag than a leading. And then if you want to talk about the market, Austin was probably the number one performing market in the United States from a percentage basis. And the amount of homes, if you looked on Zillow 3-4 months ago to what's for sale today, is staggering. There's a very good YouTube channel you can watch called Reventure Consulting. The guy lives in Dallas, used to live here in Austin. He gives all this great data, month over month comps, or year over year, all kinds of different flow. That'll give you a good idea. But there are some markets that are getting sick in the U.S. and people are just starting to see it. What's happening is you have a huge flood of inventory hitting. They haven't started dropping the price yet because everyone's still trying to hold on to yesterday's price, but it's coming.
Yeah, I've been wanting to buy a house for a while, being patient on that, but I just watch Zillow like a hawk just for that reason, just, getting hopeful. Hopefully prices start to come down. The price reductions 5-6 months ago, there would maybe be a couple houses. I live in a little bit of a smaller city at a price reduction, and those are like, yeah, what's wrong with it? Now, almost every house has a price reduction, but they're not big yet, right? We're talking like 10 grand. So the tide's turning, but I agree the price reductions are a little bit in fantasy land yet.
I mean, I've seen some price reductions around my area, and somebody mentioned it the other day. Like, so I popped on to, I think it was actually Zillow of all things, and I was just looking around and seeing what had been reduced, and it wasn't. It was probably the first time in a while that I've actually seen reductions. But then again, it just depends. I mean, I'm in Atlanta, of course, and that's a very, I would say, if you're inside the perimeter, which is 285, I mean, that's still, I think, ridiculous land, where they're paying, just sort of out the wazoo for per square footage. It's kind of silly. I don't know why anyone would be buying in the city right now. I don't know why anyone would want to live in the city. The traffic is just ridiculous, and the roads are horrible, and I don't know. I don't miss living in Atlanta, I'll say that. So
I gotta say, as an Aussie, I watch your what's it called, House Hunters and stuff like that on TV sometimes, and it's fucking incredible. Like, you see these two young couple like walk into this mansion, and it's what's the price?
first time home buyers.
$200,000. Yeah, no, but it's like $200,000 for this fucking huge mansion. It's like a fuck off mansion. It's just like incredible how cheap some of your real estate is over there. If you come to Australia, you go to a major city, like, you guys would be blown away by how much we have to pay. Blown away.
If you would be blown away by my I got like some just nasty deals. Like, it was stupid, just like stupid prices for the ones I have.
I can imagine, but it's just it's incredible. Like, I'm sure you go to San Francisco and etc. in some places, and property prices are through the roof, obviously. But in most of America, geez, you guys have it good.
Well, it's just in places people don't want to live.
Yeah, but that's the thing with remote working now. You know what I mean? If you're a software engineer or something, you can go live out in one of those flyover states and buy fucking acres of land and build a fuck off mansion for little cost. It's just incredible, that you do have those opportunities now. We've had that in Australia with this whole working, from home thing. People have fucked off from Sydney and Melbourne, and they've moved up to sunnier, nicer states, WA and Queensland, to go there. And those property prices have, some places have doubled over COVID, which is incredible. But we don't have that same sort of market as you guys do. You go, I don't know, your states, you go live in Kansas, it's going to be much cheaper than if you go live in, California.
Just a little bit.
Just a little bit? Bullshit. I've seen those house hunter things, man. Your houses in those areas are just like cheap as chips. But I understand there's less work opportunity, etc. in those places. But when you are working remotely, like, it's, I would live in the middle of wherever in America currently, get somewhere nice and cheap.
Oh yeah, yeah. I mean, and particularly if you're not choosy, or if you're willing to go to the suburbs, which are usually quieter and a bit nicer, and particularly if you don't have to work in the big city. I mean, it's just the way to go, and you just save so much money. But I digress. I was looking at some of the Eric. I know you mentioned seasonality and all that, and I don't know. I'm very cautious about that because if you look at seasonality or what we call seasonality last year, the jump in Cameco in October was almost entirely driven. I mean, let's be honest. It was completely driven by the increase in the spot price. So from basically October 8th to um, October 21st, I believe. Yeah, you had a jump in the spot price from 37.50 to 47.50, and that was what completely drove Cameco up. So if you can actually see, it's a slightly, and I think it is totally the case because the spot price started to rise a couple days before you see Cameco start to go, bullish swear word. And if anything, what we've seen here in the past couple months is since July, you've seen Cameco actually detach a little bit from the spot price, where it's actually it's way above where it has been in the past in terms of its correlation to the spot price, where it's going up much harder, much faster. And if anything, I think there's Cameco is I think more vulnerable to a return to something along the lines of $25, which would bring much more closer in line to the action in the spot price here
I would
than
say I would say that's just because Cameco is the institutional favorite. That's where all the big money is pouring into first, and that's just propping it up a little higher.
potentially. And you did see a little bit of that detachment in last October, where it did significantly move up more than the spot price. But for instance, the price action earlier this year, from like February to May, was like completely attached to the spot price. I mean, it just hugs that kind of that change just like 1 to 1 almost. But then in about mid July, early July of this year, we see that it starts to basically detach from it a little bit. And
Well,
yeah,
the one thing to look forward to is ANU coming up this Q4. Hopefully they launch in Q4 and not drag their heels till Q1, but that's $500 million coming right into the uranium spot market over probably the course of a couple months. 8 to 10 million pounds is what I guess they'll buy. I've been to a lot of car auctions out like Monterey Car Week and stuff, and I've been to like RM and Sotheby's and Bottoms and stuff like that. And it only takes 2 bidders to make a party. We make things go where you don't think they'll go.
you
And
know,
so if ANU starts lighting up spot, maybe Sput starts to light up, and now you got competing for pounds. That's the hope, anyway.
I'm wondering, how much of what I need to look up what Kazatompром's inventory is that they would be willing to sell to this ANU thing vehicle, and whether Cameco might be selling some of their pounds that they're not taking delivery from their Inkai JV to this ANU, since it's going to be there. And I don't know where the ANU warehouse is supposed to be. I would assume it's in Kazakhstan, but not totally sure about that. I don't know if there's a set warehouse or not. Is there? Out of curiosity, does anybody know?
All I know is that there is a warehouse on the border of China and Kazakhstan that China's trying to set up. So whether it's they're using that same warehouse or somewhere else in Kazakhstan, I'm not sure.
Yeah. I mean, I'd hate to say it, but we've seen a lot of, I'd say more, I don't, you'd almost call it bearish action in the market, but it's sort of, I would say the market will be continuing as normal in the status quo. I mean, there were some people that, sort of said that, like, oh, by the way, that called me somewhat. I don't know. I saw some tweets that people thought, I was stupid for saying that uh, Xi going to Kazakhstan to basically screw over Russia was like, a stupid take. Like, okay, well, no, I think that's actually exactly right. And you have a rail line on the border of Kazakhstan and China. They share a border, by the way, and you now have another route for uranium to come out of Kazakhstan. So, in addition to that, we've seen an interview with the new CEO of Kazakhstan recently, or Kazatomprom, the new CEO of Kazakhstan, Jesus, the CEO of Kazatomprom, talking about the Caspian route. Apparently, they've been sending pounds over the Caspian route periodically over the past couple of years, purely for institutional memory. So, for instance, you send pounds over that way, so these various governments remember how you deal with Class 7 cargo. It costs them a little bit more money to do that, but it was very forward thinking, and I was actually somewhat impressed by that. So it's an interesting step. You don't hear of like many corporations or enterprises that go out of their way to ensure sort of that they have security through the flow of their product, and that was very interesting to me. So, and if all else fails, you can always just put it on an airplane. But if anybody's a fan of Dune, I think that the adage remains: the spice must flow, and it's going to find its way out of Kazakhstan, and it's going to find its way to the reactors operators that want it at the fair market price. So we've also found out recently that France is they're taking delivery of Russian enrichment. It's going to the Framatome facility in Germany where they will make fuel. So there is no. I know there are certain people, there are certain, shall we say, prominent members of the uranium investment community that are just bound and determined, and they believe with all their fiber of their heart that a Russian uranium ban is just going to happen like tomorrow. It's just waiting for it to happen. It's not going to happen. So I would just be very cautious as to, I got a lot of flack for this. I'm sure I will still continue to get a lot of flack for this, but this is a market where you have to verify. I mean, when you get into pricing that is already very sentiment based, and then you add to that, rampant, frankly, reckless speculation, and then you get assets that, you end up finding yourself, if you're not really giving it an honest evaluation, I think you can find yourself buying some really overpriced assets. So, I guess just word of caution there. But I maintain, and I'm, I keep on going back to this because it's the thought I had a couple months ago that the major price action in uranium is going to happen next year, when it's going to start happening next year when utility contracts are up and they're going to be renegotiating them. So, I don't know. Until such time, I think it's still everything. Everybody needs to be. I would suggest to continue operating in a bid discipline strategy. Wait for the market to come to you. It's sort of like what I did today. Like, look, I could, just putting a low bid on Silex, and guess what? I was a penny off. I mean, that was what happened today. So, continuing just, if had I been a little bit, FOMO-y, then I would have ended up buying Silex at 375 instead of, 312. So there you go. I don't know. I would just advise patience, I guess. So.
Chapman, one other thing, and kind of like why Cameco is doing so strong, is like it's just something I was thinking about the other day. I wanted to see if anybody here has thoughts about this. So, like, initially, my reaction was once this macro started going to shit, and We started seeing a downturn. I kind of thought that Cameco was going to sell off pretty hard because I thought there would be a lot of funds that were going to have to either dump or especially dump their ETF holdings, just like because of margin calls and stuff like that. And it's still possible. But now when I think about it, like what's happening, I'm trying to think, okay, if I was a large fund that really believed in uranium over just a period of just like 3, 5 years, and I wanted to deploy, say, $500,000 into this thing, or if I'm going to get crazy, $1 billion, that is not an easy thing to do. And really, for a large fund that wants to deploy that much money, for liquidity reasons, a lot of them, there's only really a handful of names that they're probably going to want to touch. So I wonder if what we're seeing in Cameco is just a lot of these like companies, or sorry, these funds are just saying, hey, like I want to be in this thing for 3 years, but if I wait until this stuff bottoms, like this stuff's going to go up just like 30, 40, 50% in a freaking day if you try to deploy $1 billion into these names once you get the all clear. Like, I kind of wonder if we're going to see a bifurcated just equity market. I almost wonder if Cameco is going to shock everybody how strong it is, and just like everything else, institutions probably aren't going to buy as much. It's going to be crazy weak.
I'm waiting for a group like Guggenheim to come in and just drop $100 million in the spot. You know, you don't even need $1 billion to be deployed, or $500 million, but some medium to large asset managers start going, okay, just this is a pretty simple thing. We know what's coming. Give me $100 million of the physical metal. See what happens, and start seeing that pop off a couple times.
That would work too. I just almost wonder if they understand that like prices may see weakness, but it's the only way that you can deploy, say, $1 billion into the equity. Sput's a little bit differently, but I was thinking about that, and I think there may be something to that. I wonder if we're just going to see a relentless buying in Cameco, because that's the only way you can get in. If you wait until everybody wants to start buying uranium equities again, there's just not going to be enough shares out there, I don't think.
Well, I think, Cameco has shown some real strength. I mean, I could take a look here in comparison to everybody else. And you have, in terms of performance here, Cameco is one of the few companies that actually was up on today. They, again, we're up a little bit, but in terms of, a 1 week valuation, or 1 week price change, excuse me, I think they were, down one of the, they're sort of near the low end of sell-offs here. So, I mean, you've had a few different ones, but I mean, if you compare them to just say the industry benchmark of URNM, which was down 6%, well, I mean, Cameco was down 4.6%. So the average for everything is 7% down. So yeah, I mean, Cameco is performing fairly well, and it's notable that they are performing better than everybody else. So I think you are starting to see sort of a decoupling on fundamentals there from the rest of the market, and you're going to have the better performing assets that are going to get bought more, and I mean, and you can see that in just volatility. It was actually really interesting when I grouped all these together. You found that what I consider to be investment grade assets, their average volatility is 65, but assets on what I'd call the watch list and scams are closer to like 100 and 102 in terms on their volatility. So not only are you getting a better performance return on something that is just better on just having patience and buying what you want. I mean, you miss out on the big jump on those like larger jumps in some of the smaller plays, but I think that's the lesson there, is that if you're gonna play in the explorers and the early stage developers or whoever else, and you gotta wait, wait till you get a good price, and then it'll just fly one day before you even know it. But definitely, buying at the top there is just a recipe for disaster. So
Yeah, I think a lot of us, at least I just forget that like big funds can't really invest like a lot of us, right? Like, unfortunately, I don't really have the problem where I can deploy capital into anything really and move the price, even if it's OTC or anything, right? Like, maybe OTC a couple cents, but yeah, I just don't really have that problem, and I just don't really think about it, right? Like, if I want to deploy all of my money into something that the day that JPOW pivots, like I can probably do that without the price running too much, right? Like some of these funds, I think like you do see some of these things happening, just like gold and silver historically, that big funds start accumulating early and early as they should, just because these sectors are so small. Like if you wanted to be in silver equities and you wanted to deploy half a billion, $1 billion, you kind of got to do it early because when it's the cool time to do it, it's like the market's too small. I think it's like Doug Casey has a saying where it's trying to fit Niagara Falls through a garden hose, something like that. So, anyways, kind of soapbox over there. I was just thinking about that, and I think there's something to it that's why you may see just surprising inflows into some of these things, just because they can't invest like most of the people on this call. Who knows? Maybe there's a billionaire on here.
Yeah, you never know. Who quite listens to these things. Sometimes you just have like burner accounts at the bottom. I don't know.
Hey, by the way, a perfect example of this is go look at Segra's book. Segra seems to get a lot more like institutional investors like pension funds and things like that. Segra basically owns just all the NYSE listed stocks in Kazatomprom, I think. There's not a whole lot of creativity there in terms of what their portfolio is. They might have a couple large stocks on the ASX, but it's just all big board liquid stuff.
Yeah. Well, I mean, when you have a big position in something, you have to be able to, one, if you're trying to buy it, you have to be able to have enough liquidity to buy it, and the underlying has to have enough liquidity for you to be able to buy it and not for the pricing to go crazy. And two, if you want to sell it, you have to be able to sell it without, crashing that market. So, without having to resort to a dark pool. And even then,
I was just going to say, I totally agree with everything you said, Chapman. But you also have to think is the money managers are putting like pension systems can only invest, let's say, in NYSE and NASDAQ stocks. They can't do bulletin board. So by that criterion, that restricts whoever's doing the investing for them. They can't do anything but that.
yeah, man, just looking at things like everything is getting just gold and silver is getting beat down. The baby caps for uranium on the ASX are pretty much just flat. Like, not a lot of action there today. Mid caps are half green, half red. The big caps on the ASX are all selling though. Like Boss is down 3.7, Silex 3.8, Deep Yellow 5.3. I mean, this is just a normal day on the ASX, in terms of like a red day. So, it's nothing too much to panic about.
What I will say, Chappie, Deep Yellow and Boss got added to the ASX 300, so now it's tied to that index. If that index is dropping, they're going to see effects on those shares now as well. So that's probably why you're seeing bigger moves or bigger down days on the larger movers on the ASX.
Let's see what the ASX index is right now. The AUS 200 is down 0.25%, so nothing too crazy. Like Whitehaven has recovered a bit, because I guess I don't know. We're heading into like shoulder season as they call it in coal, so it had sold down just a little bit. Oh yeah, I just got a message from someone who just said that the ASX is closed tomorrow. I think this is the official mourning day for the dead hag. So oh, I'm sorry. What did I say? Rah rah Americas. So
Side note, isn't it bizarre that they actually do the interest rate meeting during trading hours, that really surprises me. Like, I'm shocked they don't do stuff like this in this environment after the market closes, just to let people digest it.
These are bankers, okay? They work 9 to 5 and then they go home.
Okay, well point.
I don't
Point
know.
well
I
made.
mean, maybe I totally see what you're saying, but my joke there is that these are bankers. Like, they have to. I think they have to work within the confines of, even if they are bankers, like they have to, the banks also close, I guess, and these banks are going to want to be open to react to whatever happens if they don't know it already. But then again, I'm pretty sure all the CEOs of all these I'm pretty sure people know what's coming. I don't know. They have to. I don't know. You can't just. Who knows? But, yeah. I don't know. It's really interesting. You just over the last couple of days, I've just noticed in spaces, just noticed everywhere. It's just everyone has been like talking like it's the end of the damn world. You could feel sentiment just from like the price action in the market, and it's just like, oh god. Everything's going down. No, the world's gonna end, and the dollar is gonna, no longer be the world reserve currency, and all this other nonsense that people talk about. But like, sheesh.
It probably will be, all that will be true. It just takes a lot longer than people think it will. I get in some pretty doomy spaces, and I think it's going to end because it makes sense to me. But then I have to figure out that everyone else takes a year or two later to figure out, before you get there. But with that huge put to call ratio we've had, any kind of positive surprise, you could just get it like a sickening melt up for these if you were short. I'll take it. Because I'm primarily long. I've been in most of my uranium stocks since 2018, 2019. I've hardly sold anything. I trade a little bit around, but it's a very small position. But all uranium needs is the market to work with it right now. And the fund flows will be back into sput and everything else. It's just not happening because everyone is exactly like you said, Chapman, unbelievably negative.
That's a great take, Eric. And what I've noticed in a lot of these spaces is like somehow people are talking for 4 hours about this and like arguing, but everybody's on the same side of this, right? It's either the Fed is going to hike us into Great Depression 2.0 or they're going to hike us into Mad Max, right? Somehow these people are like arguing, but they all seem to agree to me. Like everybody's on the same side of this. And maybe they're all right, but like if this many people are on that side of it, woof. Like you said, one little thing just ignites one hell of a rally.
Well, I'm just happy that some of the things that I missed in July are coming back down to give me an opportunity to buy them again. Like, look, I've got a lot of cash to deploy. I'm not 90% cash, but I mean, I'm probably about 50%, I guess, at this point. Um, there's I think, like I said, I think silver gets a bounce. I don't know what's going to happen with uranium though. It's too, I don't know. I can't. My crystal ball with uranium has been broken for some time now. So, yeah, I don't know.
I just, I think just fuel buyers to me are like worse than government employees. It's just enormous amounts of recency bias that goes on. There are very bright people that, are in the fuel buying space. I met a few of them before and had some nice conversations with Jeff Geringer, but they are definitely heard. They don't do anything. It's like rational or on time. I've had some other friends work for Florida Power and Light that are energy traders. And you talk about someone on the inside just absolutely bashing people that work in nuclear power plants. So these people aren't risk takers. That's why they work for these companies. And they just, sitting is the protocol that they do. They'd make great, excellent long-term investors if they got into that, but that's just not what their personality is.
I mean,
And so we just have to fight that.
it seems to me that, I mean, some of it is a little bit of just sitting and waiting. I mean, I think people have really they're underestimating inventories, and inventories makes people comfortable. And I think there's a willingness to wait. and wait to see what is going to happen. So, it is a market that does move like molasses. So, it's just going to be one of those things where I think, I would just say, like, make sure you buy low, because yeah, there will probably come a day where, something will happen and everything will just sort of take off like crazy, maybe. Like you've just never seen. I mean, uranium does have that those times where it does do, bullish swear word kind of things. Um so, it's just and you don't have to be like fully positioned, because the moves up on those kinds of events are so big that you don't even necessarily to be fully positioned to really take good advantage of it, I think. I mean, yeah, it's like you feel like you're leaving money on the table, but at the same time, I mean, sheesh. When you go up like and you double your money in a week, like, well, okay, it's still a lot of money, but
Well, a lot of these fuel buyers, they get paid not to spend money. There's bonus checks or incentives for them, and the end of the year comes on 9/30. So I think they all know that they can't get away with it for another year, but they don't have to spend stuff. There's a little extra bonus in it for them. You know, $10,000 for me is a lot better than saving the big corporate 100 million.
and this is really to the point where it's like, you see swoop prices and conversion prices at really high levels right now. There is no incentive whatsoever for them to basically buy now and to raise the price. Now, am I saying that, does that mean that we're never going to see like $75, $90 uranium? No. But something's going to have to really truly break first before that happens. So it's like, I think what sometimes this, where you have people within the uranium space that just don't allow themselves to be open to any kind of a bearish sentiment at all. Like, the highest crime is not being, is not having the belief that uranium's going to somehow, some way be $90 tomorrow. And I think, that leads to a lot of bad investment decisions. So, I mean, again, it's just,
I'm looking forward to Thursday when Macro Voices comes out. You're going to have Mike Alkin talking on there, and we haven't heard from him in a while. And he likes to, dig in the weeds. I want to hear what his commentary is from fuel buyers and what's going on that level. And, maybe you'll know some additional information off of Stadium and Richards, where they're at. Some little nugget that I don't know about, or us as a group doesn't know about. But the Macro Voices is cool because that's a lot of institutional money that listens to that podcast. And for them to feature uranium for, maybe a good hour and a half or 2 hours, I'm looking forward to that.
well, I've been seeing uranium just like everywhere. Like every little YouTube commentator, they all of a sudden now want to talk about damn uranium. And I'm so happy that they're not asking me to come on, because I would be the Debbie Downer, So it's probably a good idea that I'm laying a little bit low right now. This is very happy. I'm liking this. Liking a little bit of anonymity, I guess. But if I hear, if he goes on, I know, Eric, I totally agree. I would like to hear some nugget of inside information. Maybe there's something there. But if I hear one more time about the quote, the fundamentals have never been better than ever, I'm going to scream. Like, there is fundamentals and sentiment are not the same thing. I mean, you can build 100 reactors tomorrow, but if I all of a sudden find, if I go out in my backyard and I find, 300 million pounds of just pure uranium just waiting to be mined, well, the fundamentals are not all that good at that point. So, sentiment and fundamentals are not the same thing. And yeah, sentiment can play into price action in the market, but it is wise for people that, trade uranium more closely to just understand the difference between the two. Because if you understand that sentiment is different than fundamentals, and yes, sentiment can drive up the price, then you understand that, there are times when you sell and you sell on price action that, is just not supported by the fundamentals, and you make money. And then you'll get another round of fools that come around the next time around, that the sentiment comes to an all-time high, and you never totally liquidate your position, but at the same time, it's I think it's just the only way that like, you look at the market and you look at just how much everything is down, but I look at my account and I'm up ever so slightly. Not a lot, but I am up a bit, and that's nice to know. And the only reason I am up is because I've been trading. So, I don't know. I don't know what everybody else thinks about that. But anyway.
Well, not everybody at once.
Well, I think, look, if you're up year to date in any investments you've made this year, you've done well. You go look at those heat maps year to date for most sectors, and it's red as the eye can, far as the eye can see. So if you're up even, 5% year to date, you've done well. You've outperformed the market. And a lot of people are in uranium because it's got a fucking 10x from here, and I'm going to be a squillionaire. And, that's why a lot of us, I guess, are invested. We do see that asymmetrical opportunity, as you keep hearing constantly. But again, year on year, year to date, uranium has performed pretty well. It's held up compared to a lot of other investments you could have been in. Yeah, there's been better ones like coal. There's some people been in those coal miners for a couple of years, and they've made bank this year. But again, as I keep crapping on about every time, there's one of these spaces. It's just energy bulls. I think we're all energy bulls to some form, and uranium is, as you've stated, most like molasses. It's a long, long time. And I do believe that spike's going to come to uranium. That's what we're all hanging for. That's what we've all been predicting for the last couple of years. And I do agree that, next year is probably game time. But it matters how long that game time is going to last. Are we just going to see a doubling next year? Well, we see a doubling. To be honest, I might not sell that much. I think this is a long-term thesis that's going to play out across the next 3 to 5 years potentially. Just really matters on sentiment and what mines get up and started, all this sort of thing. There's a few factors that are going to really play into it, whether this is going to be a very long bull market or if it's going to be another short-lived spike like we saw in 2007, 2008. I think that spike will come, but whether that spike comes next year or we see it in a couple more years' time. There's different theories. You talk to Uranium Cranium, he reckons we're past that peak already. I tend to disagree. I think there's still plenty of movement in the uranium market to come. But again, we're always going to compare it to the 1970s bull run or the 2008 bull run. I think this time is different. There's a lot of different factors at play. Whether we do see the same sort of spike or we see, uranium hit $100 and stay there. If we see, that stay there for 2 years at $100, Jesus, I'll be pretty happy with the investment either way, even if it doesn't hit $200 a pound. But I think the market itself is going to need a sustained price to really push and really keep this energy transition that the world is doing. And now, of course, the West isn't doing as much. It's all in Asia, blah, blah, blah. But still, that demand's there for those pounds. So, I think really where the big bear market comes in is when stuff like NextGen comes into production. Once we start seeing big mines get into production, the pounds start flooding the market again, that's when it's definitely worth getting the hell out. But who knows when that time is? It's years to come, years to come. So you just got to be patient. This isn't a. Some people I'll rag him in again on Derek Quick. He's trades in and out. He's making all this money. I don't really see a point to it. As I've said before, it's better just to be in it, be in that roller coaster, see where it takes you, rather than trying to pick those those peaks and troughs. It's really too difficult, and you don't know what's going to happen tomorrow. But if you believe in that long-term thesis and energy thesis, you're in the right play.
Yeah, I mean, I agree with that, and it's also to answer your question, Chapman. I think I generally agree. Like, there's nothing wrong with this taking solid profits in what seems very likely to be a bear market for at least a little bit longer. Who knows? Jim Cramer did say to sell that we're going to go down, so that's the ultimate contra signal. Maybe we moon from here. Who knows? But I think at a certain point here, you kind of just got to make a decision on where the puck's going, position yourself for it, and keep most of your portfolio in there because you don't want to get shaken off from stuff you love long term too close to the bottom. I think one other example I've just found just comical over the last week is just I've talked to so many people over the years that are just yeah, they're gold bugs, right? And they're just man, I really miss this opportunity to buy gold stocks down in the COVID crash. If I ever get a chance at those prices in the miners again, I'm going to take it. Go and look at Barrick Gold. It's cheaper than it was in COVID, but yet nobody wants the stuff. So I think it's just easy, especially if you're trading in and out of stocks and making constant decisions, to always think these things are going to go lower. So I don't know. I think the truth's somewhere in between, right? Cheap enough is cheap enough. Yeah, I'm just getting close to the point where I'm just trying to position for where I think the puck is going, just long term.
Yeah, speaking of a gold stock, sheesh, they've just been beaten to smithereens. God damn. Sheesh.
Well, this is what I understand. Those gold miners now are looking really attractive to me. Some of them are so bloody low, and I don't understand. It's not. How can I say? I understand people's wariness, but it just seems they are hugely oversold, some of those gold miners, and I'm getting really interested in them. I'm going to redeploy some of my retirement funds into some gold miners in the next week or so.
Well, that's why I'm hoping and begging for a triple in uranium, and then just taking a good whack off and in terms of my position and putting it into different gold miner stocks. You talk about making a killing if you can get it a triple or 4x in uranium, then get another 3 or 5x in gold stocks.
That's my dream right there.
Well, this is the thing though. One I've been thinking about recently is, of course, I do believe diesel costs are just going to get exponential. To be honest, I don't think diesel's going to come down in price anytime soon. That's a huge influence on gold production costs. So that's the only reason I have in my head why gold's really, especially gold miners, suffering so much is their costs are just skyrocketing currently. But eventually, that's going to lead into the price of gold. You know what I mean? It will eventually funnel through, and then hopefully these gold miners and higher gold prices get valued much better. But yeah, if you believe diesel's going to keep going up in price, gold has to go up with it.
Are you more leaning towards streamers?
To be honest, I haven't. There's a couple I'm looking at currently, just on the ASX that I've got my eye on. I need to do more research into them. I haven't really done proper due diligence yet. I'll do some reading up on next week.
Saturday night, another space. We're gonna have Don Durrett on. So
awesome.
He's the man. He's the man. You got to listen to that one.
Yeah, I'm more heavily allocated towards streamers than I normally would be in the royalty companies for that regard. I guess my rationale is the whole cost structure thing. It definitely, I think they're gonna. There's a good chance they outperform for that reason. And two, something like Franco-Nevada, if I'm way wrong, if I'm way early and things get crazy bad, I don't know. I think Franco-Nevada is going to go down a lot less into some of the speculative, smaller gold miners. So I think in that opportunity, if you really are early on the bottom, you can roll some of that into even more underpriced assets too. So I'm really heavy into streamers and royalty companies right now for those two reasons.
Does anyone have any opinion on Metalla?
I don't. Besides, EB Tucker is very entertaining to talk to. That guy can sell anything, or sorry, to listen to. I don't know him.
Yeah, Metallo's been beaten down really bad. Well, it's just been brutal.
I don't know. I'd say Barrick Gold is let's see, Gold. Well, yeah, they're probably the best deal in the market leaders right now. I mean, they've got a fairly good PE, pretty low debt, um, make quite a bit of income. So, I mean, in terms of profitability, so it's I think they're kind of at a discount here.
What's that dividend, like 5%? Like they're getting really attractive, and if you look at their margins, I think their dividends are safe. Unless gold's going to like 1,300, I think those dividends are fine.
Their dividend yield is just under 5%. Dividends per share is 39 cents. So on $15 share price. So I don't know. That's it's it has definitely been beaten down. I mean that stock is is about down 25% in the last 3 months. So yeah, I mean, and it's actually fairly low volatility too, and that's the thing. So that one, I wonder what the options on that are. Let's see here.
Yeah, and some of this stuff, I'm convinced in all sectors, we'd probably all be better investors if we just like set up rolling 60-day, just like buy orders at just like a limit price and just let the machines do the work for us. Because like right now, nobody can get enough of Cameco. Like when Cameco was like $21 just a few weeks ago and looking like it was going to keep falling down to like that $19 support level, nobody's talking about Cameco, right? Nobody wanted it, but also hardly anybody was buying it at that time either, right? And myself too. I think I would be better off if I just like picked what stuff's worse sometimes, let the machines do it, and just never do anything myself. Like in the moment, I think it'll happen again. I don't think it's gonna happen, but I think if Cameco falls $21 again, nobody's gonna want the stuff. Very few people are gonna actually be buying that.
Well, I guess there's not a whole lot more to talk about. Let's. Austin, anything else on your mind? Alex, Ironwing, Eric, what's up?
Nothing too much. Just kind of hanging out.
Yeah.
One quick question for you, Chappie. 92E, what is your buy there? What price are you looking for?
I mean, it depends on what they find in Tower. If they hit something in Tower, I'd buy it now, just because it's I mean it's fairly low market cap. Without that, I don't know. Honestly, for me, I'm looking for a Tower result before I come up with that figure. Simply because I don't know. I don't find whatever that whatever it is, that whatever the deposit that they've been drilling, I just don't find that one viable. I know it's shallow, like it has all the buzzwords. I get that. I'm just it's not. I don't think it's gonna be mined ever. It might be sold to somebody else, but I don't know. I doubt it. So for me,
Isn't it near base load?
Yeah, it is near base load. So maybe base load comes in and buys it. I don't know. The thing is, it's like, that's sort of the problem. Is that you really want someone to come in and buy it for cash, because you don't really necessarily want shares. It depends on how the deal is structured, I guess. But for me, I mean, yeah, 92 is still it is comparatively cheap for, you know, the thing going for 92E is that it's kept on my watch list because they are active drillers, and they're cheap, you know, in the grand scheme of things for an explorer. And, you know, it's sort of along the lines of the same things. If you take a look at, you know, something like, you know, there are a couple of others there as well. But I mean, but you look at like ISO Energy there. I mean, you're getting a little too expensive at that point. I mean, some of your moves have already been made there in those companies. Maybe PurePoint finds something. Who knows? But for me, I think 92 is I'm more curious in 92 than I am in baseload. I'll just say that. And you know, and I do keep my eye on Ken Alaska as well, just to see what they find here as well in their West MacArthur tenement. So we'll see. I mean, those are the two that they're still relatively cheap, and I think they have some upside if they find something. So, but in terms of a price, I mean, I don't know. I worry a little bit now because of the macro environment. I'm not necessarily swinging into the penny stock explorers, even if they have active drilling programs. I think there's just too much risk there at the moment. Not without something like definite that's going to drive the price up, because otherwise you could go down on the investment here fairly quickly. So we'll see. I don't know. I just haven't formulated a price is the short answer to that question.
You know, I kind of like Appia right now for uranium because no one thinks it's a uranium company
Really?
anymore.
Okay. What do you like about Appia?
They're doing VTEM with VTEM Works. And they just talked about they found a new 10-kilometer strike structure in a release they did, I don't know, yesterday or the day before on their Loringer property. All we need is one good drill hole. And I'm not thinking about their other stuff at Elliott Lake, but
I mean, they were up
I think they're
6%
cheap
today.
on that.
So
Yeah, I think they're cheap on the rare earth side because they'll be a producer in 2023 of rare earths. You're getting all this uranium potential for free.
I mean, so you think they're going to be a producer in the rare earths? I mean, they're pretty cheap for what's going to be in production.
So at the Alpha, they only need to trench mine, and you don't need a lot of rare earths, especially the grade deposit that they have. I think it's only second in the world behind someplace in the DRC. And bear with me, I'm out of breath. I just hauled my suitcase up. I got back from Miami Beach tonight. And Saskatchewan is building a new processing center for rare earths that Appia didn't have to build or come up with the money. I think they were building a $33 million rare earths plant, and it's scheduled to be open in 2023, I think in the back half. So Appia will have the feed for that processing plant.
Just a quick note. It's never okay. So Uranium Insider used to have an unpaid suggestions, and that was on the list. So it was a public tweet. That used to be his number one thing. Again, a public tweet, was not in a newsletter, but and I'm a shareholder too. It's not done the best, but it's something to look at if at least.
Well, question: who did he? Because he was talking up his interview for his most recent one. Who did he actually interview?
Who interviewed what?
Oh, I think it's
Who did Justin interview?
Grant Isaac, or Grant from.
Oh, okay.
From.
Okay, yeah, fair enough.
Yeah.
Well, I know Justin's beef about Appio has always been about the CSE listing. That why don't you get to the TSX Ventures? You know, and there's just reasoning for that, but I've also seen Western take off, and it's still listed on the CSE. When people really want the stock, they'll bid it up. So Appia had gotten as high as $1 US and pulled all the way back down to 20 cents, like an 80% pullback, and it's still in the upper 20s right now. So, you know, from a pullback perspective, I think it's a lower risk entry at this spot. I own some Appia. It's not my biggest position. You know, some of the U.S. plays are, but you know, I think there's some upside there. And the only reason I'm talking about it is because I'm out of ammo, or I'd be buying more.
Let's pump it up, everyone. Let's go buy it.
Well, that's not my recommendation. I'm just saying it's interesting. You know, you're talking about like a cheap uranium play. Well, I think that one's it.
Don't sleep on Kraken either. Got to give that as one.
Oh yes,
they give it the weekly shield.
Oh god, they found some uranium in some surface rocks. Oh wow, amazing. Jesus. And I think their stock was up today.
Decent history of uranium.
Kraken. If you count,
Kraken's in Nevada, right?
Yeah, if you count 1950s as recent history. Jesus.
I think when they blew up the atomic bomb, that left some uranium residue around, so that may have been part of the testing.
Would not surprise me at all. Oh sheesh. But yeah, I think I was looking, and I think Kraken was up a little bit. I think they sold down. They were down just like 0.3% today. So, which is incredible. But anyway, they have fallen quite a bit in a week though. So,
yeah, I mean, if you can't decide between uranium and gold, they have both allegedly. So there you go.
So Chapman, are you going to be there on Saturday?
oh yeah, I'm definitely gonna be there on Saturday. So, yeah, I'll be there on time, and with some questions hopefully. So, yeah. But I'm looking forward
What's
to that.
going on Saturday?
We have another gold space, gold and silver. So Don Durette's going to be on, and he's just an amazing guest. He knows everything off the top of his head. It's just like he knows it all, and he just, you ask him about any stock, and he'll just kind of know it and tell you what he's waiting for or whatever. And he's going to be on the spaces, so you can jump in and kind of talk to him. And we had a really good one the first time he was there, so I'm just really glad to have him. Liberty Offense is the host of that one.
Yeah, I've been on that space before, but I always catch it like near the end. When does it start?
At 7.
7 o'clock Eastern or Central?
Central. I'm in Texas as well, and so is Liberty.
Okay, cool.
So is there like a Google form I should submit my questions ahead of time, Alex? I have about 100. We may need to organize these.
I think you gotta just pepper him in, and he answered one of mine because I had somebody asking me, I won't say who, because they said it was a family affair, what gold stock, but he just answered already. So, anyone else wants to jump in too? We got a decent room full of people, so just jump in, and if you feel like it, just kind of say who you are, why you buy stocks, or what stocks you have. It's fine to jump in if you want to. Anybody else?
Well, tell me this: are the gold people more negative than the uranium people right now?
It's
yes.
It's a different. Well, there's some overlap. There's a lot of overlap, and a lot of uranium investors are kind of like silver bugs that jumped in. That's what I am. That's what Liberty is. I don't know about Austin, but it's not as I don't know. It's not as full of fun, interesting characters. Uranium is just its own fun character place. You got dogs and
yellow balls, and all kinds of fun stuff here. Austin, what do you think? You're in both.
I've been shocked at how much crossover there is between silver and uranium. Oddly, it seems like there's lesser so on the gold side than the silver side. But yeah, I've been really, really surprised by just like the people I see in just like spaces on both topics, posting on each. I've started to get like connected with a lot of them now. But yeah, there's a lot of people that are definitely in silver and uranium. I don't know. I think sentiment's worse in gold and silver right now, outside of the segment of people that are just straight perma bulls, right? I'm not counting them. There's that segment of people that doesn't matter what's happening in the world, right? Like gold could go to $70,000 an ounce and they'd be telling you it's going to $1 million imminently. Outside of them, I would say sentiment's terrible.
I got a shout out to one of my friends that showed up, Tom Robinson. So he's in the chat right now out of Dallas.
Jump in if you want to.
I think he might be a lurker instead of a talker. That's no big deal.
Okay. But yeah, it's a different thing in gold and silver because there's just more types of companies and there's just a lot more of them. It's way, a lot bigger market cap. So, I mean, how many uranium companies can you can just count them all up and, you can own almost all of them. Just buy a little bit of each of them, and, but there's just a lot more gold and silver, a lot more jurisdictions too. I mean, you think about, how many, like you have uranium, what you have in Canada, you have some in Africa, little bits here and there elsewhere, but it's just it's not the same. There's not as many places. Andrew, jump in.
Oh, hey guys, how's it going? Good conversation. Yeah, I was just gonna say on you guys were speaking a little bit about Barrick. Valuation wise looks pretty good, but I guess it ultimately depends on whether you think gold is going to go to 15 or 1300 or even hold here at 1670 or and head higher. I mean, much depends on the dollar strength, I think. But Barrick has I don't know if people have liked they put a lot of capex into this Pakistan project. And they have a pretty big project in the Dominican Republic with Newmont, which is a joint venture. Which those are big questions if those pay out going forward. So those are sort of the what ifs. But their balance sheet is pretty good, and they don't have a lot of debt. They have cash, and I believe they have some preferred debt. But otherwise, Barrick looks pretty interesting, especially under 15 to my eyes.
I bet Austin has something to say about that. He likes balance sheets.
Yeah, I think that's maybe the one thing that people maybe miss about just like the gold sector even more than the silver sector. I mean, the industry got a bad rap for a good reason, right? Like Barrick famously just spent just like billions and billions for just like a hole in the ground with absolutely like almost no gold in it, right? They made a lot of bad decisions and invested reckless amounts of money pursuing growth at all costs in the last bull cycle, but it's kind of like how US shale really just like cleaned up their act, right? U.S. shale almost died, and they put this like a ton of work into cleaning up their balance sheets, building more efficient operations, investing in a lot of technology to lower costs. Like Barrick's really cost control over just like the last like 5-7 years, it's insane. Just like how efficient these companies have gotten. Like even that, it's like $1,600-$1,700 gold. They make a ton of money. A lot of them have net cash positions. Even taking out, just getting rid of the gold aspect of it, I think a lot of them are just good, well-run companies now. We'll see what decisions they make in the future, but I think they're going to turn a lot of capital to shareholders because, like, Barrick's really, outside of things you mentioned, they're really not spending that much money on capex. They're just trying to return money to shareholders at this point.
Right, and I saw something recent on Kinross. I think Elliot or somebody was helped them with this buyback. They're smaller, but I think they acquired a some land next to barracks, Great Bear. I think they might overpaid for it, but they have some assets, and they did get out of their Russian assets pretty swiftly, which was probably a good move on their part. So that might be another one of interest. KGC.
Andrew, what are your favorite gold miners? Like, what are your like top three right now?
Yeah, I do mostly. I invest mostly with the bigger names. So Newmont, Barrick, and only some of the juniors. Although I was burned on one of them this year. Fortuna, FSM. They've performed really poorly, but I thought the valuation was tremendously compelling. But I was proven wrong.
I just bought FSM today, so that'll be fun. Maybe I got them at a good price.
You bought them from Andrew, so you
Well,
could have just gave him the cash directly,
actually,
right?
I bought FSM because, I mean, if you go look at the silver space, I was comparing them to Hecla and Killer, and the latter two just have so much debt, and Fortuna did not. So I mean, for a fairly similar amount of revenue. So it was just that's a potential, just a swing trade, really. I don't know if it's a long-term hold yet or not. I didn't really buy a lot of it, but my operating thesis is that silver gets a bounce tomorrow, but we'll see. Yeah, I don't know.
The person that I've always wanted to have on on our spaces is either one is the Silver Insider. So Steve Penny. He's one of my favorite. I have his newsletter, and yeah, I just always wanted to have him on. Either one, but he's a uranium bull and a silver bull both. So there's plenty to talk about with him. And what kills me too is in one of the other spaces they had like with Chapman, or not Chapman, but Corgi and the Uranium After Dark crew. Like they had him in the space. I don't even think they noticed he was there. I was like, damn it, just like bring him on. But they just had like, they had a lot more people there at the time. Chapman, is there anyone you want to bring on really bad, or you would want to talk to?
Not at the moment. Probably I will. I don't know. I'll figure it out, but come up with something. But no, there just hasn't really been anybody I wanted to talk to just at the moment. Um,
For those people also, like you said, you talked to Mark Chalmers. What exactly? I mean, have you done? I just haven't caught up. Have you done an interview with him or not, or just kind of
oh,
personal?
I had a Zoom call with him, just personal
Is that
one-on-one.
posted or not? Or
No, it didn't. It wasn't recorded.
okay.
Mostly because I wanted him to be as candid as possible, and having it not recorded, I felt like I was gonna get that. Um, so we'll see. Like I said, it was a good conversation. I mean, it definitely it turned my Energy Fuels is not my whipping boy anymore. I need to find a new whipping boy. So I don't know. And I've been wanting to make NXE that, but people have been talked me down off that post. But I don't know. We'll see. Like I
Yeah,
said,
it might be something worth considering. To like do a public thing or not, because like a lot of people were a little pissed at you about that one. But I don't know.
a little.
Yeah,
That's an
I don't know if
understatement of
everyone
the
knows
year.
that you kind of like talked to him or not. I mean, I
Oh,
hardly
people
knew him.
were upset that he even reached out to talk to me. I mean, that was the thing. Like, who is? I mean, it's like, oh, you badmouth the company, and then the CEO wants to have a Zoom call with you. Like, oh, okay, all right, yeah. But hey, it worked. I mean, like I said, be very clear. I have not changed my investment position on them at all. I just, you know, uh, intention of management is half the battle, though, and I think there's good intention there. So whether the market will make that happen or not, it remains to be seen. So
We got Pimkin jumping up, or I think that's what it is. Yeah, Pimpkin Spruce. So jump in if you want to.
Thank you very much. I just have a question. What do you guys think about buying call options that expire in January of 2024 for gold, silver, and uranium minor indices or ETFs?
I
I
think if
mean,
you're going to do that, you want to do it when sentiment is very, very poor like
yeah.
this, right? Like, if you want to do it, I think now's the time for that. I think you got to be conscious of what you pay, of course, but yeah, I think leaps in like the gold, silver space, especially, are good. I mean, I'm not an options trader. I don't go like crazy deep into it. For what I have seen, I wouldn't necessarily say that uranium calls are cheap in my book, but yeah, I think there's some gold and silver calls that are cheap if that's your cup of tea.
Thank you so much.
I would definitely wait on the uranium side of things if you want to buy the leaps until, until everything, if it calms back down and we start to see some cheaper prices, particularly in Cameco and energy fuels and places like that, just because the volatility is so high in uranium that the options are expensive. So, if you're if you're looking at like, buying something, let's just say, you wanted to buy like a $28 call, well, it's just a heck of a lot cheaper, to get that call on a long dated option when Cameco is trading at like 22. So, I don't know. I would just wait for like a really deep red day when the options go on sale, particularly for uranium. But yeah, just I don't know. I'd be very picky about that. So, choosy, I guess. If it just to ensure that you've got that good return potential or not. So.
Thank you.
Well, I just think like options pricing. I haven't been looking at the options chain on a lot of these uranium stocks. The most frustrating thing to me is when you look at them, like Denison or Energy Fuels. They're all like, if the stock is at $1.25, you're buying $1.50 or $1.75 or $2 options. You don't have a lot of in between.
I kind of see like uranium. It's Camco is almost the only show in town unless you want to go like ETFs. I've dabbled a little bit in some of the smaller options ones. Candidly, it hasn't really gone that well, which has kind of like burned me on a little bit. Just like the liquidity sucks outside of those names.
I would agree on that.
Just go back, Chappie, real quick on trashing uranium companies. Go ahead, mate. Don't listen to anyone. Give your honest opinion. Don't worry about any hate you get from, long-term holders that, have a lot invested in the company. Give your honest opinion at the time. Don't worry about what anyone says, dude. And look, hey, if you start calling out next gen, maybe he'll sit down with you and explain why you got paid $28 million last year. Maybe he gives a satisfactory answer.
Sheesh.
Who knows?
Apparently, he gets really annoyed. Apparently, whenever they get asked the question about compensation, I would not be the right person to be asking that question, because I would basically, honestly, I would really be asking him like, why should you be getting paid like millions upon millions of dollars for an asset that is nowhere near production, that still has a ton of hurdles to climb, and we are now in a very price conscious, or a very price inflationary environment, and management has demonstrated no ability to control administrative costs whatsoever. So,
correct. It sounds like a pure lifestyle company, and it's fine if he got paid $28 million
it's
because
just so frustrating.
fully permitted. I've got my feed done. I've got funding. We're ready to press the button. If he achieved that in a year, oh yeah, $28 million for getting next gen, up and running. Not a bad, it's probably worth the money that you would pay him. But sitting around your ass doing nothing, just telling everyone what a big deposit you have for a
For
year, doesn't
years.
sound like a
Years
justified.
upon
Yeah,
years
but
on end. So
correct. But just even for this past year to have that sort of remuneration for nothing. Look, of course, I haven't heard him explain why he justifies his own pay. But yeah, so give shit to all these CEOs. Don't worry about it. Like I'm with Cranium on this, with his conspiracies. It's all everyone is nice to one another, touches each other. Everyone's got a great deposit out there. I hope everyone well. There needs to be some honest,
well,
investigation and questions for some of these companies.
I'll just say this, and then Andrew will get your hand. I wish more shareholders would take the attitude that management is a fat cat taking a salary until proven otherwise. They are not your friend. I mean, they are someone that you have hired, and you are entitled to ask them tough questions. So, I don't know. I'll just say that. But Andrew, what's up?
Oh yeah, just something from Cameco's perspective. I mean, I held Cameco when not pre Fukushima, but in 2011, but back when they had that tax liability and we were sweating and it was under $10, and I missed, it's tripled in the last couple of years, and I missed most of that move. Unfortunately, I do hold some in my portfolio, but it's hard for me to get a read. There's been a nice bid in the market for the shares here, and I know their earnings are supposed to normalize next year. I don't know what the estimates are. They're probably like $1 to $2 on the earnings front, but I just feel like there are a lot of tourists, uranium tourists, that are hopping on the bandwagon, and it's been a little frustrating that the spot price hasn't really budged over 50 from my perspective. But I do like the company, and I like the prospects, and I'm looking for better entries, like probably most of you.
Yeah, you know, that's I mean, I saw this interview with Antonio, and he was interviewing some guy from Bulgaria, and this guy from Bulgaria basically said, he's a big in 10, he's big in just mine investments in general, and I love this interview because he said that he's been hearing the same one. He likes to swear a lot, and you know what they say about people who swear a lot, they're generally more intelligent. um but anyway, at least that's what the science says, I think. But regardless, he said he's been hearing the same uranium thesis for 5 years, and he's just tired and sick of it. And it's just like more lifestyle companies in the uranium sector than anywhere else, and it's just what just infuriates me about next gen is that it's like what Iron Wing's saying. It's like it's a prime amazing deposit, and you have management that's treating it like a lifestyle company. And that's just infuriates me to no end.
Well, how many oil and gas CEOs pay themselves that much? That's what's jaw dropping, right? And oil and gas has enormous free cash flow.
Yeah, yeah, I know. It is disgusting, just sickening, just how much they are abusing SG&A, and the fact that there hasn't been. I'm just shocked that there hasn't been a shareholder revolt at this point, or you haven't had somebody come in with that deposit, and someone with actually some real money coming in and basically trying to get a seat on the board or something like that, or just to clean that
just
thing up.
write a friendly one pager to Carl Icahn, see if he wants to get active.
I don't know. Does he do mines? Out of curiosity, because I mean, it's like, I could see the only reason that I can come up with for NXC sort of dawdling here is that they want to be in production when Cigar Lake is depleted. Maybe that's the plan, because Cigar Lake is, I believe, supposed to be about a 15-year mine, and around
I think 2028 is
yeah,
when Cigar Lake is supposed to go offline.
exactly, and that's when NXC wants to be in production. That's the only reason I can think of, and that makes sense. But you're sort of counting on. I mean, that's sort of the interesting. It's like, what exactly is Cameco gonna do? Because they're gonna want to replace that Cigar Lake deposit, but are they going to be able to? This is sort of the interesting thing about Cameco is where are they in 5 years? So
I think Cameco owns ISO and not NXE.
see, that's I like your thinking because I don't know if you noticed where ISO found that huge deposit about I don't know, pretty much it's 200 meters down or something like that, and the deposit just it's open, and literally like it's like these little semicircles of this high grade stuff, and right next door is Cameco, and they have that Hurricane deposit, I think, and I think NXC, which they own ISO, they're going to sell it to Cameco, to get money for Arrow, and I think Cameco buys that, and then they, it's going to be it's a gamble because Cameco seems to have the larger part of that deposit of wherever it goes. I mean, you never know. It could just completely take a little smaller. It could fall off immediately once it crosses the tenement boundary, but Cameco doesn't own that with anybody else. I mean, that's theirs, so they don't have to have any joint ventures there. So it's like, let's have a Cigar Lake without a joint venture. Like, oh boy, that's gonna be fun. But I know I totally see that, and I think there's also the secondary thing of what does Can Alaska find, and if that turns into something substantial, then Cameco has another. They're the people that Can Alaska would want to sell to. So yeah, I mean there's the possibilities, but it is up in the air. So, and you never know what's going to happen with NXE. I mean, I'm sort of surprised that they haven't been bought yet, to be really honest. And I think that's sort of why the CEOs and all these, they're just paying themselves obscene amounts of money because they don't expect to be around in a couple of years.
Can you imagine what his golden parachute is if he's paying himself that much money right now? If we were to buy out NXE, he's probably got like 3 years worth of salary coming straight to him.
Yeah. So, I mean, probably, I don't know. I wouldn't be surprised.
If NXT did get bought up, though, I would say that it would be a huge bullish indicator of just M&A taking off. That would be a massive, massive move.
Well, I mean, the only people who could really buy them would either be Cameco in a joint venture with Orano, or BHP or Rio decide they want to come back into the uranium space in a big way.
But would Canada allow a foreign nation to be able to buy a large uranium deposit like that?
Sure,
or a foreign company?
I mean, Rio bought what was it? Egyptian something. Whatever that deposit was a couple years ago. Cameco bid them up on it, though. It was crazy. Rio will never make any money on it. Oh, sheesh, I know what it is.
So the Aussies are exempt because I know China can't buy a uranium company outright in the U.S. or Canada.
Well, they do have quite a bit of stake in fission.
At 20%, right?
Yeah.
But you can't own the whole thing, is what I'm saying.
And I think they also get preferential pricing on uranium as well. So like it was a pretty sweet deal. But this was back in the bears of the bearish market when Fission signed that shitty deal.
So if you're in the G7, you got different rules than if you're China looking on the outside.
I would say so, but I mean, China is getting so close to Kazakhstan at this point that I think they'll probably have enough uranium just through Uzbekistan and Kazakhstan. But we'll see. I still think China is going to be looking for M&A, and they're going to be primarily looking in Africa. Then again, I saw some really crazy numbers on Hisab this year that while the output was the same, the amount of ore processed was up like by a huge amount. Now, I don't know if that's just because they have to get through a certain amount of ore just to get through just to get back into what is, comically considered to be of a decent grade. But I mean, that just shows you just how, I don't know. Frankly, that was like when I found that out, when I heard about that, just how much ore they had to process this year just to get the same amount of uranium. It kind of turned me off to everything else in Namibia at the time. Like, and this was maybe like a week or two ago, and it was just like, holy shit. I think I'll just stick with global. I don't know. Because it is just like, holy crap. But that will kill your any kind of like operating costs if you have to, have any shareholders to appease. I mean, it just sort of, it's really why I think anything in Namibia. I mean, granted, it's different if you think somebody's going to come in and buy the deposit who doesn't necessarily care about making a profit. They just want to get the uranium for their reactors. But if you're like any sort of if you're like any company that's trying to make a profit in return for your shareholders, I mean, yeah, it can be really difficult, I guess. I would think. I mean, even like a Paladin. I mean, I was actually talking to Chalmers about that, and he thinks that they've high graded that so much that it's gonna be interesting when they go back into production. Like, just exactly what it really turns out to be of how much money they're gonna make on that.
It's so hard for me to trust any CEO because I have not talked to a CEO who hasn't talked shit about someone else's deposit in the uranium space. It blows my mind. No one likes anyone else's deposit, but the only deposit they like is the one they're sitting on. And then when you brought up Paladin's name, I don't know if I should take it as an omen or not. I went for a long walk up Collins Avenue and went right across the street from the Fontainebleau Hotel today, and I can send anyone a picture if they don't believe me. It was about a 70 to 90 foot yacht, and the name of the yacht was Paladin. So I don't know if that's a sign. And if that's the case, I definitely know what I'm going to name my yacht then.
Was it Rick Rules?
I don't know if it was Rick Rules or not. Could have been the Australian guy that made all that money, the construction guy.
Oh, the story that we never. Sheesh. If I hear anything more about, oh yeah, uranium is going to go to $600 a pound. Like, oh my God. I'm sorry. I was doing some calculations on, like just how much room there is left in Paladin, and there's not a lot, in terms of like growth in that stock. It's pretty much kind of maxed out. I mean, I'm interested in Boss, I guess, because I want to know what they're gonna find once they start. If they're, in theory they have a lot more uranium around them. It's just really a shame that it's not 4 Mile. So, but
well, that's the one CEO that I just have a crush on is Duncan from Boss. Every time he talks, I don't know, there's something about him. He doesn't trash anyone else's. He's focused on his company, and it will be in production. It's not a doubt, and I believed that 2 years ago. You know what I mean? That was my first company I ever bought, and he did an awesome interview with Antonio about a year ago now. maybe a bit less. But it was an hour-long interview with him, and it's astounding. And just seeing his excitement. He's the only CEO. He'll stand up, point to his plant. This is here. This is that. This is where we're expanding, and he actually breaks down like the whole mining process. Fantastic CEO, and I really think he would be great running a larger mine as well. So I'll be interested to see what Boss does in the future.
It's really a shame that 4 Mile is not publicly traded. When I was talking to Chalmers about that, he considered that, because I think he worked on that deposit, and he said he considered it equivalent to Arrow. They don't push it quite as hard as they can. But then again, when you don't have any shareholders to satisfy, or when you only have private shareholders to satisfy, and not, publicly, all the nonsense that comes with being publicly traded, you have the liberty of doing things like that. But it's Beverly 4 Mile. It's just really a shame that that's not publicly traded. I look at that like, oh my God, why can't I own that? I could, but I'd have to have a lot of money, I guess.
Correct. Only the big boys can own it.
I'm sure Rick Rule probably has some of it. I have no doubt. Who knows? Maybe.
Yeah, Chapman, I just sent you a picture with a couple other guys, that Paladin boat, if you want to take a look at it.
Man, that's a big boat. Sheesh. That thing, man, that's about a $5 million yacht, I'd say, at least. What do you think? A little bit more, maybe? I don't know, 5 or 7? Probably maybe 2 or 3 used, I guess, if I had to guess. But...
yeah, I'm just thinking I'm going to just replace the name and put Encore on the side.
Oh, sheesh. Oh, man.
What I don't hear you guys ever talk about is Goviax. No interest from there. Like, if it was here, I might potentially buy it on the ASX if it was here.
I just hate the cap structure of GoBX. I like Daniel Major as a CEO. I think they have decent deposits. It's just so many freaking shares outstanding.
We're used to that down here, though.
Yeah, I mean, if I'm gonna buy something, look, I want to go into Niger, and I'm like, okay, yeah, I'm gonna buy GoVX or I'm gonna buy Global. I'm gonna buy Global all day, every day. And that's the problem. Like, GoVX doesn't give me a reason to buy it, so that's my issue there.
See, that's the thing. I don't know much about Niger mining. I know it's a little bit riskier than Namibia and potentially Botswana. And there's a bit more, geopolitical risk there, is there not?
Yeah, I mean, I think that is a little bit overstated, but because I still think at the end of the day, like, Global is, I'm waiting for that price to come down a little bit, but I know that they're going to come out with those numbers here fairly soon, that they're going to be increasing that deposit size. I'm very curious as to how much, and I know that phase 1 is also supposed to be increased as well, and that's going to change the way that deposit looks in terms of, it will be significantly. There's upside there. I'm just wondering how much, and that's sort of unknown. But I don't know. I like I said, I might have been heard of this space. It might have been somebody told me that Roman has burned some people in the past. So I don't know. Maybe that's the other thing. It kind of keeps Global down a little bit, but I think it's the lack of a listing on the lack of uplisting. It really hurts them too. But I don't know.
Well, when do you think global might go make a run for the New York Stock Exchange or the NASDAQ?
Probably when they have feasibility done, like updated feasibility and all that set and ready to go. Something that they can bring to investors, I guess, a bit more substantial than what they have now. Then I think they'll go for it. That could be later this year, early next year. But I don't know. It just depends. I mean, that's I'm kind of curious if he's been asked that question or not. So
Outside of global, what would be the next candidate that would make the jump?
let me think about that for a second.
Would it be ISO?
Potentially. I mean, it depends. If ISO does make the jump, I think that would be a fairly strong signal that next gen is getting ready to sell them. Because yeah, I think that's why they would. That's why that they would do that. Vision might be. It depends if they continue to find some good stuff and improve their resource. That would be the other one.
Well, Vision would have to do a reverse split.
Yeah.
To be able to get up there just because of the value of their stock.
Oh well, yeah. That's a lot of people. Who else? You might get either, well, there's not many. Sheesh. Maybe Silex. I think that they would be, that's probably going to happen. They're going to take Global Laser Enrichment public. So with Cameco. And
I want to ask Ironwing this question. Any ASX stocks, is it preferential to be on the LSE or the New York Stock Exchange based on an Australian-based company?
No, it's a company liquidity you would want out of it. There's probably a couple that would benefit from trading on the New York Stock Exchange that are listed. But people say that like DPL issues on the TSX. I don't think it's worth it. The amount of liquidity on there. I think it is worth it to get on New York. You know what I mean? The American money there, I think they could really help some of these places, because some of them are great plays that are hugely undervalued still compared to their US peers. But I don't think there's a lot of, how can I say, hunger for those companies in the steady rates currently. They get enough liquidity on the ASX, but they want to dual list. I don't know the costs, but the New York only know what it wouldn't bother with LSE or TSX.
Okay, and not the NASDAQ?
Well, potentially NASDAQ. Anywhere in the US, I think a lot of investors in Australia are concerned about the cost of those additional listings and whether it is a benefit or not. I don't know. Aussies get quite conservative when it comes to that. Like, go look at CEOs and their pay. Go look at Aussie listed companies compared to American, and Aussies are paying themselves like half the price. We are quite, I don't know, we judge people for doing things like that, and it costs us general company. For other big lifestyle companies, we're wary of them because there's plenty of them on the ASX. You don't do your due diligence. Jesus, we're so resource heavy with these lifestyle mining and exploring markets in every metal that you can think of. But investors are very wary of that sort of stuff.
So the two candidates probably would be PPL and Bannerman, right?
Correct. Also, like with the box might, I think that could do quite well over there as well. I don't think Paladin would ever do it. I don't think there's a value in it for them. But DPL, I think, is really the one that can get a lot of talk and value over focusing on that stuff.
And Bannerman would do it to really blow up the just go from that Tango project they downsize it to doing something truly major?
Well, that's the great thing about Bannerman. Whether it can go 18 or it can go 20, how much pressure you get something out, just go straight to the 20 plan. But yeah, it needs a lot of money. So to be able to capital raise over there as well would help Bannerman hugely, I believe. But whether they actually do or not, because this is still a pretty small company. I mean, the motion cap recently, so we're talking $300 million Australian market cap. So it is still pretty tight. So, I don't know the liquidity and, market cap rules for those different exchanges. So that's where I think some of these smaller companies that some Americans want to get the money into, so it's in the ASX or trading OTC, it's going to take a while. You're going to have over $1 billion market cap for, I think, these companies to see any value off it.
On the NASDAQ, you can go up, as small as like a $75 million to $150 million market cap. You just need to have a stock price over $3. So, these guys would have to adjust their cap structure to get there.
Correct. Well, and that's why some of them already have. If you look at Boss and Bannerman, they've both done 10-to-1 consolidations over the past 12 months. Mm-hmm. So, I think that's why some of these companies are moving that direction, because then if they do get a big uplift in their share price, then, they've got the potential to do that. So, yeah, I wouldn't be surprised more consolidation. I don't think Deep Yellow would, because their share price is sort of around $1. But yeah, some of those other ones, we'll see. But Bannerman even, it's still like 30 cents, probably less. It's probably much less at the moment. I haven't looked today. But, so, yeah, we'll see. But I don't think there's going to be a big push for it.
Well, thanks for that input. That helps a lot. I don't keep up with the ASX listed companies nearly like I do with stuff here in North America, but
that's why I join these guys
to rotate, because I think some of the stuff here in New York will get really hot, and ASX will move, but maybe not as hard, and then maybe you can rotate into that if the U.S. front runs everybody else.
Correct. And you search any sort of sentiment sort of indicators, on Twitter or on Reddit. Everyone, you ask, what do you hold? It's always Denison and CCJ basically, or Denison's a huge one in UEC. So it's like those three companies that everyone owns over there, most of the time. Well, down here you've got a bit more choice, I believe, for, especially a smaller exchange, like in Australia. You've got a lot of choice down here. So that's why I haven't really moved down into the US sector, and that's why I listen to these guys and ask a lot of questions about US companies, because I don't do the same sort of research on them. I'm sure there's some great companies there as well. When you guys talk about some, Canalaska sounds very interesting. What's the other one? And even Global. Geez, if Global is down here, I would have bought it. But I've got stuff like that and Deep Yellow, to sort of offset that. But if that was traded on the ASX, I would already be on it, I'm sure. So it's a great hearing, about the US side of things. And yeah, any questions you have about Australia, I've got a bit of knowledge. I'm sure there's plenty more people out there have a lot more than me. Pat, for example, is great. But yeah, happy to answer.
So, I've had this discussion with a few of my friends. When we get this next up leg in the uranium market, who are going to be the leaders? We kind of came to a consensus that it was going to be ISO, Global, and maybe Encore in terms of the next shot up. What do you guys think?
I think the ones in Australia, are you referring to that, Eric?
No, just overall, just anywhere in the world.
Oh, you can check it.
I think I'd agree with Global, and I would agree with ISO. Maybe, definitely Global. But yeah, hard to say who else. I mean, Silex is still going to be... They've kind of done their run. They're going to hang out here for a little bit. But I think Silex moves again sometime next year. and I think they'll move up to, they'll be in the $8 territory again. Maybe later this year. I don't know. I would say definitely by next year, though. So, it's, I think they'll bounce around between like 3 and 4 in the interim, though. So that doesn't really answer your question. The issue is like who's cheap, and so if Canalaska finds something substantial, they'll become a $200 million company, I think, in fairly short order. I think the same thing goes for 92E. Those are the two that I'm keeping my eye on, and just seeing where it goes.
I'm not looking for exploration as much as just money flows. It's like we're seeing Cameco get hit first with institutional money, right? But when the fever really begins, you've got these developers moving on into producers. And so you get the revaluation there, plus that's the next year where I think the money flow comes from. And that's why I was mentioning those names, is really about their size or what kind of deposit they have, or who's going to attract the most amount of flows.
Man, it's hard to say because everything in uranium is so damn expensive. Nothing really trades at, any kind of a discount, if we're being quite honest. So it depends on the uranium price, I would say, whether you're going to see, like, if you do get, all right, let's go into hypotheticals. If you see like $90 uranium, you're going to see a lot of money flow into NXE, I think, finally. You'll see a lot of money flow into Global. You'll see a lot of money flow into Boss. I would also say, man, it's so... You'll see money flow into American plays, but I don't know. Whether they will be, like, able to capital... I would like to think that that's not going to happen, but it probably is. So, I would say, like, if you do see that, you will see a lot of money flow into Energy Fuels. You'll see a lot of money flow into Encore. So, and I think those would be the winners. And maybe ISO. But it just depends. It depends on what NXE wants to do with ISO. Do they want to sell it? Do they want to develop it? Do they want to? I think they want to sell it. I think they'll have to sell it because they're going to need cash to make Arrow happen. So, the question is who buys it. And, yeah, I don't know. Beyond that.
I'll ask you guys this one question. In the next 2 years, which developers are going to turn into producers in a 2-year time frame from today?
Global Boss, Paladin, URG,
Potentially Penn, the Peninsula?
maybe.
And maybe Lotus?
Maybe,
Encore
yeah.
producer next year.
Lotus is so, I don't know, they're so early stage. That's the thing, is that they're still in discussions. I mean, I don't even think they're going to have their money situation, like a plan
They've
for...
raised already.
Yeah, well,
They
they've raised
a couple
20.
weeks ago.
Well, they raised 20, but they need 80 at least. So I think they'll have their money situation maybe squared away by the end of the year, and then they'll maybe start some planning. They might start construction, refurbishment by next summer. Maybe. That's if everything goes really well. Maybe Encore's in production. I mean, I don't know how much in production they're going to be. I know what they're doing in Texas. How much they're going to get out of that is a different question. So, I mean, yeah. Encore will
The
be...
point with these companies, with all these shapes and all small mines, none of these are huge projects. They're either restarts or they're mainly restarts. most of these companies. Now, again, and I think there's a big gap between that 2-year time frame for those near-term producers turning to developers, and then any other developer is going to be 5 to 6, 7, 8, 10 years down the track. I think there's a big gap between those, what you can count on one hand, basically, compared to every other developer out there.
Yeah, I would say so. I mean, it just depends on, it depends on what's found. If there's something found that you find in...
If you find it, you permit it, that's taken years, then you got to build it. You're talking, you have a find today, it's not turned on minimum 7 years from now.
Depends on where you find it, but I mean, if you find something in Africa, you could have something online in 2 or 3 years. But
correct, but the grade you're going to have isn't going to be as well as it is in the Athabasca.
Yeah, and we have to assume that it will be shit. So...
Well, and the big ones, the big deposits that we know of today is stuff like Bantam and these other deposits that are still 5, 6 years, 7 years down the track.
Yeah.
Anyone who thinks Bantam is going to be up in 5 years, even, I think is kidding themselves.
Yeah, I have to agree with that.
Yeah, so the point I'm trying to make is that the actual cash flow into uranium mines is basically CCJ, Kazatomprom, and those 5 others that you've named.
Yep, pretty much.
Other than that, everything else is so much further away. So you've got this from 2 years from today until, you've got 3-4 year gap where uranium prices might get insane. And that's where those companies that are producing, e.g. Boss, I think their, NPVs are going to blow out.
I would hope so. And I think, that's how Boss, I don't know. I would like to hope that there is, something a bit more maybe promising on the horizon in Australia, but there just really isn't.
No, nothing else. Vimy maybe in 7 years. I'll say Vimy's up maybe 5. Maybe I mean, 5 if they really push.
Vimy has to. They do have to continue construction, I believe, just to keep the mining license, of course, and keep that process going. But, yeah, I mean, I don't know. I'm curious as to what Alligator's gonna find. There's a couple, others, but it's so hard to, sheesh, there just isn't a lot.
You see my point from 2025, 2026 are going to be very funny years in uranium, because that's when the real demand crunch comes in. And again, we've only got fucking around 5 mines that's producing, I don't know if you count it all up, maybe rough estimate, maybe 15 million pounds a year. Probably in that space.
I think that's super generous. Probably about 5 to 8 million pounds.
Exactly. So I'm trying to be super generous here. Let's say they can ramp it up 15 million pounds by 2025 in total. If I don't know if CCJ get better and Kazatomprom starts putting down more of their PCP pipes, etc. You may get up there, but that's the time that I'm seeing the hard figures are going to come out, and that's when the spot price is going to run. I think people are being too generous, saying, hey, next year spot's going to go awesome. It may take another year or two, but then you got that sustained price for another 2-3 years until more supply comes online. That's where I'm seeing it gets scary, is not next year or the year after, in 2-3 years time. That's when uranium sort of gets really scary.
Well, it should, it should get scary sooner than that, because there's such a lack of closures of nuclear power plants now, and all these extended life that wasn't really anticipated. And each year that goes by, we're getting 10 to 12 new reactors that come online. So everything is about bottleneck economics, right? When it comes to the oil market and some of these others, an extra incremental 2, 3, 4, 5 million pounds of demand just totally negates those 5 restarts that happens. So it's just, there's 2 years later, they're in the same boat that they were without the restarts.
Oh, agree. When I said scary, I meant scary good. For the very,
But I think it's
very,
even worse than what you were painting it because they're not counting all these reactor extensions.
well, agreed. I know a lot of that had been put into the the demand perspective for the future. They haven't even really taken into account for spuds purchasing, let alone stuff like ANU and other things that come online. So but again, as everyone's invested in this, thought it, as the Spanish guy, I think he was, that Antonio interviewed, hearing about uranium for the past 5 years. And Cranium will also mention, he's linked articles going back to 2017, 2016, saying, hey, uranium's going to hit $100 tomorrow. It has been a long-term thesis, and it's going to play out, but I think it's just going to take longer than people suspect. But then, what it can potentially get to, when those things, Chappie, you're saying like $600 uranium, there's a possibility something like that could happen in those timeframes. Could, not saying it's going to. I think once it starts reaching $200, that's when a lot of other production sources come online, e.g., getting it from water or getting it from, what are they, phosphate tails?
Yeah,
other things become
I would say
economical.
that your maximum uranium price you're ever going to see is probably $150 in your lifetime. I don't know. I don't see it going any further than that.
I think it could go further than that, faster than that, if a craze happens. We just don't account for fat tails right now. Like, who says CGN doesn't come out and buy GoviX and Global within a 6-month time frame?
Yeah, there's a possibility. Yeah.
So then all of a sudden, people like, shit. What's left? And then you can have a situation of nations competing against each other for uranium reserves and not utilities.
I mean, a lot of this could just go, the crazy things that could happen with uranium, it can all be blunted if Australia just changes their policies. There's just so much uranium there. And
it's not happening, Chappie.
I know it's not happening. I know. But I'm highlighting the market risk. So, but yeah. No, I mean, it's like Australia is just like this gold mine of uranium, and they just refuse to allow it to be mined. So, sheesh.
Honestly, I would say in the next 5 years, you're more likely to have a reactor blow up than Australia start pro-uranium mining.
I just don't get that country. I don't know.
Labor's in power now. It's not going to happen. It just simply isn't. SMRs maybe in 10, 15 years, but the uranium mining is still going to be looked down upon. And it's banned. And most of the jurisdictions where there is the uranium, those states,
yeah,
banned.
Oh, yeah. I mean, it's doesn't make any sense. I don't know. I mean, granted, maybe I think it's just it's such a low valued commodity. That's the problem. I mean, I know this is like one you would say, but look, it's only so many dollars a pound. It's not like gold that you just or even iron ore that you just you have a lot of demand for that they can throw their weight around. There just isn't. I think that is the problem. But I think this is where I would say if the price gets high enough, where you could get like real money in there to start giving to campaigns of politicians, that could change things. But I don't know. It's not something I would account for. Like I would not put that in my bullish thesis. In other words, or my bearish thesis is Australia changing tack. So.
Well, that's the thing, though. You must love us, because if we went and dug up all the uranium like the Kazakhs are over there, Jesus, the market would get flooded, and there wouldn't ever be a supply sweep a day.
Well, yeah, I mean, and Australia could be the next Kazakhstan. I mean, it's very similar mining, in situ. I mean, exactly.
You tell that to any Australian, you could be the next Kazakhstan, and they're going to go, no, thanks. We'll be Australian.
Well, I mean, the next Kazakh. Let's see. I know what you mean. I mean, and there are.
Uranium here is the tiny, like compared to everything else that we have. Like, yes, we've got a large portion of uranium, but we make all our money off iron ore and tin and copper and nickel. Like,
and
you know what I mean? Like,
uranium, and a little bit of gold, but not that much. So it seems.
Yeah.
Like I was sort of looking, like they just like ASX listed silver companies. There's just I haven't been able to find that many.
No, there's hardly any. That's why I'm not investing in silver here.
Yeah. So, but I mean, I'm looking at like gold, and it's like, oh, okay, well, there's a few here and there. They're all getting beat to hell at the moment, but I mean, this is that's what it is. Yeah. So, oh, all right. Well, what do we think? Any closing thoughts here before we sign off for the evening? No.
I'm going to keep pumping it every time, Chappie. Most undervalued stock is ACB on the ASX, ACAP Energy. Botswana mine with over 300 million pounds in the ground, same size as Bannerman, but half the cost. To me, once I started looking into it, I was like, this is undervalued. It got kicked out of the URA recently, but has now really recovered. And if URA has to add it back in at the end of October, that's going to be interesting.
Yeah, and it's not Hard Rock, is it? It's like pretty close to.
It is.
Oh, it is Hard Rock.
It's close to the surface. No, it's close to the surface. Really close.
But is it Hard Rock or not? I forgot what that.
I don't think so. I don't know.
Because that would significantly reduce the amount of operational cost. Because I mean, if you have to like grind up all that stone, and then for your acid leaching, heap leachate, ponds to pull the stuff out, that does save some money, but
I don't think they would ever produce. I think they'll sell out to the Chinese. That's my plan with it.
Yeah. I mean, the Chinese come in, make a good buy. So, I mean, it's a pretty low market cap. I might have to upgrade them to my. There's some companies that some stocks I follow here that they have crossed the one my. Maybe they're going to have to make my large cap a little bit higher, or I'm going to start moving some of these companies up into that into that higher list. So, and I will see. So, Oh, sheesh.
Look, it's an interesting company. They've got really low grade. Don't get me wrong, the grade's pretty bad. But what they're trying to focus on is the ore sorting to potentially improve their grades. So that's where they're focused on. So we'll see what happens. But just the amount of pounds, and it's a JORC resource, and it's cheap. So that's why I bought it.
I don't blame you. I mean, look, if something's cheap, buy it. So, all right. Well, think we'll call the night here. So, that's it. We will just see everybody next Tuesday. Hopefully, we've all survived the Fed meeting. So, other than that, have a good night, everyone. I think it's a good place to stop it there. So, anyway.
All right. Good night.
Good night. Best of luck trading tomorrow, everyone. Except the Australians, because you'll have a day off. So, there you go. You'll be able to watch from the sidelines of what could be the celebrations or the carnage. I don't know. We'll see.